What is up, everybody? How's it going? Welcome to another edition of Benzinga Live. Spencer Israel here. Thank you, Rohan. AB will be joining us in a few moments here. He is wrapping up a recording we are doing for the latest episode of the Raz Report with Jason Raznick. So he'll be on whenever that ends, probably in the next 10 or so minutes. But we got a lot going on today. We got some SPAC news. So we brought on Katje to tell us about that. We have some IPOs to discuss with Matt Hammond. We've got Jake Wujastic from TrendSpider, Chris Capre from Second Skies Trading, and we may even talk, actually I know we'll talk a little bit of Forex. So we got a lot going on today. And Shelly, what do you mean no? Aaron is here. He'll be joining us in like 5 minutes or 10 minutes. I don't know when. But he's here. I promise he'll be on the show today. In the meantime, you're stuck with myself and George Costanza. So let's roll that intro and start the show.
This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How are we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujastic from TrendSpider. We have
breaking news.
All right, how was everyone's weekend? You guys have a good weekend? Mine was relaxing, uneventful, a lot of errands. I'm curious. Shelly, Firat, Matty Ice, Easy. This is everyone's weekend. Shelly, I didn't have bed hair this morning. I shower and like, dude, that was not bed hair. I don't know why you said that. That cut me deep, Shelly. You said I had bedhead this morning. I don't think I did. If I did, it was unintentional, which is even worse. Anyway, let's start the show off by doing a quick crypto update. Find out what exactly is going on in the world of crypto right now. Oh my lordy. Oh well, it happens. Red across the board today. Bitcoin down 5%, ETH down 6%, Solana down over 8%. Wah, wah. Hey, how's our favorite coin? How's Mongoose Coin doing? Do we have can I get a quote on Mongoose Coin, please?
Let me do that.
Thank you. Oh, Rohan, you actually know? I'm surprised.
I can Google things.
I'm surprised you're in the know on Mongoose Coin. Do you know what that is?
Very slightly from what you guys have talked about.
Very slightly. Okay.
But also, I will say, the whole crypto map being red, it's a very good thing. I mean, I wouldn't be upset about it.
Because you want to buy the dip, right?
Of course.
Yeah, I know. I saw the Russia thing too. Whoever posted about that. Yeah, Russia said they're not going to let their mutual funds own Bitcoin. I don't know how large the Russian mutual fund market is. I'm sure it's several $1 billion, if not more. You also had Elon Musk saying a bunch of stuff about Bitcoin and what it is and is not good for. All of those things are not reasons to me why Bitcoin would be down today or why the crypto market doesn't generally move on any one headline. The only times I can remember that is when China outright banned mining and when the SEC has come out and said something negative about Bitcoin. That's the only times I can really remember the crypto market reacting to like actual news. The market is so democratized and it's impossible to pinpoint why it's moving up or down on any given point. But to what Rohan said, I am generally in the same camp. I like when crypto goes down because it gives me a chance to buy more at a lower price. My buying strategy when it comes to crypto is very, very simple. I do not try and time the market. I do not try and do technicals. I just buy on a recurring basis. Every couple of months, I buy a little bit more and a little more and a little more. And the idea is eventually I'll have enough of my overall portfolio invested in crypto that I'll be satisfied. But I'm not there yet. So in the meantime, I'm a net buyer. And this applies mostly to Bitcoin and ETH. I've only bought Solana one time. I do not know if I want to buy more. I do not know if I want to buy more cryptos, like different coins, frankly. I'm not really at this point in my life. I'm not really in the market to speculate. I could be, but maybe at some point in the future. But I'm not there right now, so you won't really see me buying Mongoose coin with any significant, with anything more than a couple $100.
Speaking of Mongoose coin, is
Yeah.
there a reason like I see a market cap here, right? But is there supposed to be some like incomprehensible price on this that's just a lot of zeros? Because that's what I'm looking at.
Dude, that's how they all are.
Yeah, I couldn't tell you, but I can tell you the market cap is down like 5.5%.
All right, that's something. Yeah, because it's like point zero 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 zero
Literally all I see
zero
is
zero
zeros.
zero 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 27 or whatever, and that's how Shiba is too, and Doge was for that matter. But anyway, this has been your crypto update. I'm a net buyer, and I remain that way. If you want some free Bitcoin, it's very simple to get a free Bitcoin in this life. All you have to do is go to your Voyager app on your phone. If you don't have Voyager, download it. Enter the offer code ZING, ZING. Fund your account with $100 and make your first trade. When you do all that, they will give you $50 in free Bitcoin. What a time to be alive. Let's move off of crypto for a second here. Let's move into SPACs. From crypto to SPACs. I mentioned a couple of headlines this morning in SPAC land. I'm sure some of you saw the Harley Davidson news. We will talk about that, but we need someone who actually understands this stuff and is not just me. So with that being said, let's bring on Chris Katje, Benzinga's SPAC guru / expert / whatever synonyms there are for those two things. Chris Katje, what's up, man? How we doing?
What's going on? Yeah, welcome to Merger Monday. 4 SPAC deals announced now this morning. A lot of activity in the space, including that big one that you alluded to just a minute ago.
All right, you want to start there? All right. So full disclosure, Chris, I got your pictures. I don't know the order that they're supposed to go in, so we're gonna have to figure this out as we go. But I'll start wherever you want to start. You want to start with the hog or one of the other ones?
Yeah, let's start with hog, and we can always look at those slides, during while I'm talking or after. Some of them provide a nice guideline to some of their projections. So for those who haven't heard the news, Harley Davidson is spinning off their electric vehicle unit Livewire. So Livewire is merging with AEA Bridges Impact Corp. That's ticker IMPX. This is going to value Livewire at $1.77 billion. So Harley Davidson is also investing $100 million in the deal, and so is Kimco, which is a strategic partner. Kimco is a Taiwanese motorcycle and sport vehicle manufacturer. So this deal is expected to close in the first half of 2022. Public IMPX shareholders will own 17.3% of the new company. Harley Davidson will own 74% of the new company, and Kimco will own 4%. New ticker will be LVW. So Livewire has a plan to redefine motorcycling. They intend to be the industry leader in electric motorcycles. They're going to build upon Harley Davidson's 118-year history. And interesting note that Johan Giles, who's the CEO of Harley Davidson, he will serve as the chairman and acting CEO of Livewire for up to 2 years after the merger. So Livewire has a 10-year relationship with Harley Davidson, and they became a separate division in 2019. So Livewire 1 is the current electric motorcycle model, comes with a price tag of around $20,000. So Livewire said it will benefit from their strategic partners, Harley Davidson and Kimco, to leverage items like engineering, manufacturing, distribution, supply chain, and logistics. Total addressable market size, $2.5 billion in 2021, growing to $20.4 billion in 2030. And will sell its motorcycles through store-in-store models, gallery stores, pop-up retail stores, and Livewire on the road. Harley Davidson has over 1,400 global locations, and they will start nationwide sales and support for Livewire in the first half of 2022. Harley Davidson has market share of 45% in North America, 6% in Europe, and 68% in China for the 601cc ICE market. So now we get to forecast. So Livewire is forecasting 387 units in 2021, 957 in 2022, and then we really see the expansion in a couple of years. So 100,961 units in 2026, 190,000 in 2030. And with that being said, revenue forecast 33 million for 2021, 56 million for 2022, 1.8 billion in 2026, and $3 billion in 2030. Gross margins expected to be 18.6% in 2026, and long-term 25 to 30% gross margins. IMPX shares up slightly today. Hog, though, up 10% on this deal. Spencer, I heard you guys talk about it on pre-market prep. What are your overall thoughts on this deal? And then let's jump into questions and those slides.
Yeah, I can kind of see both sides. Because on the one hand, this is basically a admission from Harley Davidson side that, okay, we are going to forever be a gas guzzling based company. We're still going to own this other company, but like Harley Davidson, as you know, is not going to change. And I could see why there's reasons to not like that, because EVs are growing and gasoline based engines are not. However, nobody buys Harleys because they're environmentally friendly or they're fuel efficient, right? You buy them because they're loud and they're noisy and they're it's a lifestyle. Part of me has always wanted to buy a motorcycle. I don't know if I actually would do it, but I've thought about when I would ever do that. And so I don't hate the deal at all. The one thing I'm never a fan of, Chris, I don't really like it when the same guy is the CEO of two different companies,
Yeah, that was interesting to read in there. And that's going to be for 2 years. I mean, that he's going to be the CEO of both companies. I was surprised because obviously Livewire has their own management team, their own division. So why not have one of them lead it? But like you said, Harley Davidson's still going to own a big piece of this company. And with that CEO, they're also going to have the big control here. I like these spin-off deals. I think we're going to see more of these, Spencer, where these big publicly traded companies decide to spin off units of their company. And you used to do that, just by a listing. And now I think we're going to see some SPAC deals come out from these kind of carve-outs in different industries.
It's definitely an interesting idea worth thinking about. I'm not even convinced that the EV bike market is a thing. Are you? I mean, do people buy bikes because they're fuel? Maybe it is. I don't know.
See, when you say bikes, I think motorcycles, no. I think bicycles, yes. Okay. And we saw that with some other SPAC deals, especially over in Asia, right? Two-wheel vehicles is a huge global market. But motorcycles, I mean, you said it, Spencer. I mean, I have family members, right, who own motorcycles, and it's all about the noise, hitting the open road, the brand, the lifestyle. I don't know if environmental concerns are top of mind for this demographic.
Plus, frankly, if you're on a motorcycle and it's quiet, that could even be like a safety concern, right? Like the loudness lets you other people know when you're coming, and, so they hear you before they see you. So, I mean, I'm into motorcycles. I don't quite know if I'm into electric motorcycles yet. Electric cars is one thing. Electric motorcycles is something entirely. But you're right. I think it's very interesting that we're seeing the spinoff into a SPAC. Definitely wouldn't be surprised to see a lot more of those, and we've seen a number of big spinoffs this year already. So we'll see. Could be a good way to unlock value. I don't know. We'll see. We'll see how this plays out. What else we got, Chris?
All right, and then the other big deal I wanted to talk about. So we have a metaverse company going public via SPAC. If you haven't heard metaverse, obviously a huge growth term, a huge buzzword, right? with Facebook changing their name to Meta Platforms. We're getting lots of companies going all in on Metaverse. So now we have Metaverse infrastructure company Infinite World going public with Ares One Acquisition Corp. That ticker is RAM. So this values Infinite World at a pro forma enterprise value of $700 million, which includes $93 million worth of cryptocurrencies currently owned by Infinite World. So public RAM shareholders will own 20.4% of the new company. After the merger, the company will trade as Infinite World with the ticker JPG on the NASDAQ. Love that ticker. So Infinite World acts as a bridge between the physical and digital worlds. They empower brands and creators with the engine and technologies they need to engage customers and fans in the metaverse. They offer infrastructure, marketplace solutions, and content production platforms for items like non-fungible tokens. They've partnered with more than 75 brands and creators. They also own a segment called DreamView, which was founded in 2016 by several former leaders at Lucasfilm and Disney. DreamView offers visual effects and 3D art forms that have been used in blockbuster films, brand campaigns, and sporting events. So they said that this merger will help them accelerate their platform and expand brand partnerships. The list of brands, we're going to show a slide in a minute. I mean, it's got some brands that everyone knows and loves. They see a $2.5 trillion market size for the metaverse by 2030. Brands are expected to release products in the metaverse at a growing rate going forward. And as you can imagine, you know, a minimal revenue right now. They see revenue of $19 million next year, $71 million in 2023, and by 2025, $384 million. Spencer, can you show the slide? There it is. I mean, so, you know, we talk about this deal and you may not think, you know, every company is, you know, betting on the metaverse, but look at this list. Amazon, Bleacher Report, Disney, Home Depot, Hot Wheels, Mattel, Warner Brothers. These are all companies that have partnered with Infinite World. So to me, Spencer, this is a perfect example, right, of that term that we use at Benzinga, the thing behind the thing. You know, if you want to bet on Metaverse, you can bet on, you know, Facebook, you can bet on Roblox, you can bet on some of these other smaller companies, or maybe you can bet on a company like this that's going to have, you know, a hand in helping bring companies to the metaverse. Spencer, what are your thoughts on this? Again, a small company, you know, still in the growth stages. Metaverse, though, is going to get some attention, I think, from investors, and also that ticker JPG.
What did you say the deal value of the company at again?
700 million, I believe.
Yeah, that's what you said. Okay. So on the spectrum of valuations in SPAC land, that's pretty low.
Yeah.
Which is a good sign, because this company is still early stages. Obviously, some big brand names on this chart here, and actually, nice. Do you hear that? Is that just me? Is that just my end? Then maybe just me. Sorry about that.
Just you. I don't hear it.
Okay, cool. So I'm like, obviously, I'm like super into the metaverse, right? It's like very bullish, brand new thing, but like it's so early days. I have no idea who's gonna, you know, be the winners here. I saw a tweet or a note over the weekend that it made me roll my eyes so hard, and I think it was an article about a Jefferies note, and it was like Jefferies says it's not too late to get into to buy the metaverse. And I was like, not too late. It's too early. It's really too early. It's like the top of the first inning here. Yeah. Not too late. What do you mean not too late? It's the top of the first. So I don't know. I don't know, man, is my answer. I'm bullish to space, but how do we know who the winners are going to be? I have no idea. I hope. I guess here's what I'm hoping for. Within a year, a couple of these companies will begin to set themselves apart in terms of like, I don't quite know how to put it, like operations in the metaverse or whatever things they're doing there. And then I'll follow those leaders, whomever they are. whether it's metaverse company or Meta or whomever, right? I don't know. I'm bullish space, but I don't know who or how. I don't even know what to look for. Like partnership seems like a good thing to look forward to.
That does seem like a good thing.
I don't know. I don't even know. Wait, we have a few more slides here. So there's that's a little bit more about the company. I want to pull these up here. Okay, so marketplace infrastructure. So that's interesting.
So again, I mean, they're going to partner with these brands, and to me, that's one of the reasons why I like this, Spencer, is because if you're a brand, are you going to, hire people? Are you going to invest a bunch of money to create your own metaverse division? Or are you just going to partner with someone who, has done it already? And if you pull up that slide that's got the image of LeBron James, right? They also have a digital image division.
Where's LeBron James?
I think it's the
There's
next
LeBron.
one.
There's LeBron.
So they did like this digital series where they did these hypothetical one-on-one battles, right? So it was like LeBron against, I think it was against like Wilt Chamberlain. It was Kevin Durant against Larry Bird, right? Just a fun little series. But if you look at that image, I mean, that's something I would picture being in the metaverse, that LeBron James there on screen. So they've got some history. Again, minimal revenue. We still don't know, what those partnerships look like. But I think for people looking for a pure play metaverse company, this is at least one to consider going forward. Spencer, how about the ticker, right? We talk about tickers a lot. JPG is going to be the new ticker. Do you think that brings some value and power going forward?
I don't quite get it, because like JPEG, but that's so Web 1. We're on Web 3 right now.
We are Web 3.0. So also they didn't get
it.
JPEG because I believe that ticker is already taken. But JPG, the new ticker.
I like what AbHex just said. The software side is probably behind the hardware. Yeah, I'm down with that. With that. However, I would definitely pay money to see a virtual LeBron James versus Michael Jordan basketball.
Yeah, I'm gonna have to look at those battles and see which ones they did, because they highlighted a couple in the presentation. I didn't know about this. I hadn't heard of this company, but these hypothetical one-on-one battles in the metaverse, I mean, I think that's something that people would watch if they knew about it. So the fact that I didn't know about it, I mean, maybe there's some room for brand awareness there from this company.
All right, what else we got here today, Chris?
All right, so those were the big two I wanted to highlight. The other deals that were announced today, we did get SVFC with Symbotic. So Symbotic is a revolutionary artificial intelligence-enabled technology platform for the supply chain. So this is a SoftBank SPAC. This is done at a large valuation, but they have a $5 billion contracted backlog. Walmart, Albertsons are two of their customers. So they have operating systems in 1,400 stores in 16 states and 8 provinces in Canada. $433 million expected in revenue in 2022, up 73%. So this is robots, right? Autonomous robots that operate in stores to help with inventory and supply chain issues. Public shareholders will own 6%, and Walmart will own 9% of this company going forward. $4.75 billion enterprise value. Spencer, what do you think of this? I know we just had an interview at our last event with a robotics company, right, in the security side of things. This one helping with supply chain. I mean, I've been to stores before where they have, robots that kind of go around and scan items and check inventory. Do you see that being a growth area? And, what does that relationship with Walmart mean for this company?
Yeah, it's funny because like we've all been saying, oh yeah, the supply chain crunch is going to have lasting implications in the way of companies investing heavily into robotics, right? But I actually don't know of any companies that are doing that. Besides, like I assumed, like Costco and Walmart and Target were all like, and Amazon, obviously Amazon. But this is kind of the first pure play that I've heard of. Not that I've looked too hard. So I'm into it. I'm very into it. Like I don't know. Like where do you stand on this? Because I'm into the idea for sure.
Yeah, I mean, I like it. Obviously, that's a big valuation, but the backing of SoftBank and Walmart, I mean, that stands out, right? Some of these other deals, they're companies you've never heard of, they're partners you've never heard of. You've got Walmart owning 9% of the company. They partner in their stores. I like it, and I think it's something that's here to stay, right? I think there used to be this big worry that robots were going to take people's jobs, and I think we've learned with supply chain issues, labor crisis, that that's not necessarily the case, and that we need some of this automation to help with issues that we're having in the country and worldwide.
Yeah, although I do think eventually that they will take people's jobs,
or take over the world. But I mean, that's a whole nother story. And someone mentioning in the chat there is Berkshire Grey, BGRY. That's a similar robotics company. They're a logistics and supply chain company. They work with warehouses. I think they have deals with Amazon and some others. So that's another name in the space to watch. Kay Lopez saying Tyson is doing it with Tyson Foods. So we are seeing it, right? We're seeing that these companies are using robotics. So Symbotic, I like this deal. I like the growth ahead. I'm working on my article about it, so you'll see that on benzinga.com later. But again, a lot of deals today, so it's hard to really, figure out, which ones are the long-term winners here.
Yeah, and you know what I would love? So Tyson obviously is not building their own robots because that's not what Tyson does. So whoever Tyson's buying from, is it Berkshire Grey? Is it Symbotic? They got to buy from somewhere, right? That's what I want to know. That's what I want to know is who's actually selling to the big, manufacturing companies that actually need this stuff. So whether that's Symbotic or not, I have no idea. But that's what I'm interested in. Okay, what else we got?
And then our fourth deal, we have HYAC. This is a deal with Biote, which is a medical practice building business within the hormone optimization space. I've never heard of this company. Biotech is not my specialty by any means. Revenue of $136 million expected this year, up 17%, and $163 million estimated next year. This was done at a $667 million valuation. I'll have to dive into this one further. But again, 4 deals today, Spencer. We haven't had a Monday like this for SPACs in a long time. We did get one deal called off as well. SCVX called off their deal with Bright Machines. So that's a trend we're starting to see, right? The last 3 or 4 weeks now, we've had at least one deal called off. And then
I'm sorry. What was the ticker on that one?
SCVX.
Thank you. Okay.
So we should be down today, down slightly. Again, they're back to the drawing board now to find a new merger target. But again, a growing trend. And, on the flip side, though, we have all these SPACs searching for targets. And I think there was, big worry that there wasn't enough companies to bring public. But then, Spencer, that deal today to carve out the Harley-Davidson electric vehicle unit, I think at least strengthens part of the argument that there still are, companies looking to go public, whether they're private, whether they're, spinoffs. So that is something to watch. And then the other one I would highlight, we do have Planet, the satellite company. We talked with Niccolo De Masi and Will Marshall a couple weeks ago. PL is the ticker. They report quarterly earnings tonight after market close. They just completed their SPAC merger last week. This is really early for a company to report earnings after completing that merger. So a lot of people are excited about this and think it's a bullish sign that earnings are coming this early. But we will see, and I will definitely be watching that one after market close tonight.
And for whatever it's worth, Planet was the subject of the latest episode of How I Built This on NPR, which is a great podcast if you are into such things. I have not heard it yet, but I will listen to it this week. And so I saw that and I thought, hey, I know that company.
You do know that company now, yeah.
What was I about to say to you, Chris? 2 things. Oh yeah, eToro. I saw some noise about that. That merger looks like it's maybe not going to happen now, or what?
Yeah, that merger, it's been delayed and very time sensitive, taking a long time to be completed. It is an Israeli company. That's something I pointed out before on here, that a lot of times these international deals take a longer time. But there are heavy reports that that deal is going to fall apart. We'll see what happens. As of now, it's just been postponed, which means we don't have, a definitive date anymore. That was one I was looking forward to, right? Spencer, you and I talked about that, right? That, they have right now the copycat trading, but they have some growth initiatives, including, growing share in the U.S. Also, I don't know if you saw, Spencer, but the founder and CEO of eToro, he bought a Bored Ape Yacht Club NFT, changed his profile picture, and along with that, he said that eToro was exploring NFTs and building out the potential for a marketplace. So keep that in mind. Again, we don't know if that deal is going to go through. FTCV is the ticker, but they are looking at NFTs along with their crypto platform.
Probably not going to help him with the SEC at all.
Probably not. You don't want to be throwing a bunch of new things, right, out there.
Chris, I'm also curious before I let you go. Did you see the article in the Wall Street Journal where they asked for SPAX predictions? Did you see that one?
I think I saw part of it. Yeah, I think I had Julian Klimachko quoted in it. We've had him on the show before.
It was. They just asked the same people. They asked 5 people the same question: where are SPACs in 5 years? Some interesting thoughts. I do like what you just said. What we said before about the spin-offs into a SPAC.
Yep.
I feel like we're maybe moving away from like the traditional SPAC buys this growth company for a crazy valuation, and maybe we're in for some more like complicated deal structures. Maybe that's a good thing, right? Like Bill Ackman tried ultimately failed to buy a piece of a company, Universal Music Group. It didn't quite work out.
Spencer, great point. I'll tell you the next one to watch to see if the SEC lets it go. I don't know if you heard this one, but Panera, right, is going public again, and there is a SPAC. The ticker is HUGS that is essentially acquiring an early stake in Panera pre-IPO, and that hasn't really been done before. So we'll see if the SEC allows that, because that is another one maybe to watch, where some of these companies, before they IPO, they actually get investment from the SPAC, to get that capital going.
Chris, do you know what Panera is called in St. Louis?
It's the St. Louis Bread Company.
Yep.
Do you know how I know that?
I don't know how you know that, honestly.
So I used to work for Olga's Kitchen, right, Michigan brand, and I went to Chesterfield Mall in Missouri to open an Olga's Kitchen, and we thought that store was going to do amazing. It was a great mall, and inside that mall there was this huge St. Louis Bread Company that always had a huge line, and no one in Missouri knew what Olga's was. They all knew what Panera and the St. Louis Bread Company is, and eventually that Olga's closed because they could not compete with Panera.
I remember you telling me the story that you went to Chesterfield for a while, so I forgot about that. I should have known that you knew that. Spencer, I'll fill you in. So
fill me in.
Panera was founded in St. Louis and started as St. Louis Bread Co., not Panera. And in St. Louis, it's like a colloquial, like people just call it Bread Co. Hey, do you want to go grab a bagel at Bread Co.? It's not Panera. It's not even St. Louis Bread Co. It's just Bread Co. And then I guess when I think a different company came in and said, like, all right, let's expand, let's franchise this out, let's go national, and they decided St. Louis Bread Company wasn't a good enough name
for a national brand. That's probably right.
For a national brand, so they went with Panera, but they kept. And it's so funny because like even the branding and everything, like when you go to a Bread Co. in St. Louis, you get a cup. And it has the Panera logo on it, but it says St. Louis Bread Co. So it's so interesting that I can't think of another national brand that is called something completely different in just one city.
Shelly, that's why I'm confused, because I didn't know this. I'm learning here. We're all learning here.
That's a good question, though, AB. I'm going to have to do some digging to see if there is any other companies that are like that. Spencer, do you know any that have a different name, like regionally, than they do on a national scale?
No.
Well, you have Hardee's and Carl's Jr. is the same chain, but different names in different places. But that's a little bit different. Yeah, I'm trying to think that there's a story behind who came in and kind of, you know, like I don't know if they bought Panera outright or if they just like paid to license the branding to franchise it out. But whoever was in charge of that did a really good job, and I think they are doing the same thing with another restaurant right now. I can't remember off the top of my head.
Interesting.
Well, let it be known I'm bearish any company that goes private and then goes public again.
Like
don't like
that,
it.
Wait,
like
you mean that was
chain?
public,
Is
goes
that what you
private,
mean?
and then goes public again?
Yeah, one that's public, it goes private, and then it's go public again. That's Krispy Kreme. I'm done with you. It's Panera. That
How long ago was Panera publicly traded?
4 years. I don't know, 3, 4 years.
Yeah, I was thinking like 6 or 7 years ago, and then they got bought out by what is it, JAB Holdings, right?
Yeah. Wait, chat's got you back, guys. Kroger has a different name in Kansas. Today we learned.
What?
All right, we'll look into that.
Dylan's.
We'll look into that. I love. That's my favorite. One of my favorite things about like talking to people from different states and stuff is just the regional grocery chains. Like
Yeah.
Spencer, what was your regional grocery chain in New Jersey?
ShopRite.
ShopRite.
yeah.
There you go.
Down in
We had-
Florida, they have Publix. Like I had
Publix
never
is
heard of,
amazing.
Publix is
I had
awesome.
never heard of I had never heard of Publix until I went to
Publix
Florida.
is awesome.
So,
Yeah.
So Chris, when are we going to continue seeing these? I guess maybe this is a question for our next guest, Matt Hammond, who we got to get.
Fuck. Chris?
Wait,
There
you
we
guys
go.
are back.
I was like, it
Hey.
froze. Oh my goodness, it froze.
Oh man, that was funny. Yeah, we lost our connection on our end. I don't know if you guys just heard me curse. I hope you didn't.
It's very rare that happens here in the Benzinga office.
Okay.
When we're on
Wait,
Fiverr. but
Aaron, finish your
it
thought.
happened.
Finish your thought, and then we'll
Just
go.
We're
I
talking about
feel
the
like-
carve outs, right? The spin outs.
Well, we keep seeing, whether it's Portillo's, Dutch Bros, all these kind of fast food chains going public. I wonder if every other chain is just going to see this and be like, oh, yeah, we should do this. All these other ones are doing well, and when the end of that will be.
Yeah, I actually put out an article of a couple restaurant stocks to look at as acquisition targets. Those, of course, are publicly traded ones. Outback parent Bloomin' Brands, right, is always talked about as a potential target by private equity. But I think you're right that a lot of these like fast casual brands have to at least be considering going public, right? We saw it with Dutch Bros, we saw it with Portillo's, we saw it with Sweet Green. I think we're going to get more restaurants going public again. Spencer, I'm kind of on the same boat with you with Panera going public again. I don't eat at Panera. I don't know how much growth they have. I do know their digital growth has been very high, but I don't know if that's a reason to, re-enter the public markets and how investors will take that.
Yeah.
It's a money grab. It's a money grab.
You know what stock I haven't looked at in a while is Cheesecake Factory.
Cheesecake was one of the ones that made it out of the pandemic by the skin of their teeth.
Yeah, do
Yeah,
you know
they
how they
got-
made it out of the pandemic?
They got that money.
They told. Did you never see that? Because I remember. So there's one in the mall, right, that I used to work at.
Yeah.
And Olga's in. They essentially told landlords of malls, "We're not going to pay rent."
Right.
And they told the landlords, "Hey, if you don't like it, evict us." Right. And so they didn't pay rent for months. So that's how they made it out, because all these other restaurants were paying rent and not having money to pay their employees, and Cheesecake was just like, we're not going to pay rent because we're too important to this mall. And with that being said, that
Dude,
shows how
they're
important
right.
they are. They're
Heck,
right.
they're
I
freaking
mean,
right.
Yeah,
that was
they
one of the
proved their
big
point.
That was one of the big headlines that came out a couple weeks after the market crash from Corona. It was just, I remember it perfectly. It was just like Cheesecake Factory says it cannot afford to pay its rent. And I was like, well, me and Cheesecake Factory both.
You got something in common.
Yeah, exactly.
All right.
But yeah, so the stock obviously got hammered and then came all the way back. One of those stocks that went well above its pre-COVID levels for God knows what reasons, but is now looks like it's come back down toward its kind of pre-COVID levels. Looks like it was actually we're like right at where we were before the COVID crash. So interesting there. We'll have to keep a lookout, Chris, on some of these food names.
Definitely.
Chris Katje, thanks a lot, man. Always a pleasure.
Thank you, guys. Have a good one. Smash that
All
like,
right.
guys.
Smash that like. You heard the man. All right, we're running behind. We got to bring on Matt Hammond here. I would love to get Matt's thoughts on that discussion. We noted several fast casual IPOs this year. Matt, of course, watches the IPO market like a hawk. Let's get Matt Hammond on the show from IPO Warriors. Matt, what's up, sir? How are we doing today?
I'm doing all right. How about you guys?
Good. Do you have thoughts on that conversation on just the plethora of like restaurant IPOs it seems like that we've gotten this year?
Yeah, those actually did really well. The first one that really kind of got everyone's attention was Dutch Brothers, and I missed an entry on that one by about 50 cents, which I was pretty bummed about, but I didn't expect it to do what it did. I don't think anybody really outside of maybe Portland, but it started kind of putting together the story, which made a lot of sense, which was, hey, if people love this brand in one place, if it's growing, if it's successful on a regional level, why wouldn't it be successful on a national level? So with Dutch Brothers, we saw it spike. It was over 100% within a few days of the debut.
That was crazy.
And we had another one that sort of flew under the radar and didn't do phenomenally well, but that was First Watch Restaurant Group. But it did well enough to kind of put things on watch. And by the time we had Portillo's, we said, hey, this one really could be a good play. That happened to be my wife's birthday, and I was taking the day off. I didn't, again, expect it to be as explosive as it turned out to be. But at that point, we could see the trend. And by the time Sweetgreens debuted, the story was everywhere, to the extent that Sweetgreens ended up debuting at simply too high of a premium for it to be a great IPO debut play. In terms of if you bought the IPO stock, then you did great. I think the IPO price was $28, priced above range by $2 or $3. And then it debuted trading at something like above $50, which just, at that point for a restaurant chain just doesn't give enough upside room for it to go further to make it worth buying the debut. And, we're also kind of at the tail end of this, very hot market, which has since pulled back. So, there's two conversations here. One is, are these stocks in demand? Clearly, they are. They're an interesting growth story. They're not just tech. People need to eat. Certainly, delivery, eating out seems more and more people want someone else to make their food for them, and less and less people either know how or even want to cook at home these days. So, I started making lists of companies and that I would love to see. For example, In-N-Out Burger is supremely popular in California and the Western states, and unknown on the East Coast. And I understand that they don't want to expand too quickly. I don't know that they'll IPO, but if they did, it would be one to watch. But with IPO trading, if we're going to kind of segue into the strategies that I'm using to kind of make money off of IPO debuts, I'm not really buying IPOs. First of all, I'm not getting IPO allocations. I'm just buying when they debut, just like everybody else. My strategy is about trying to find what is going to have immediate demand on the relatively low supply and give me an opportunity to take an immediate scalp within, ideally the first day right away off an initial run. Sometimes it's a day 2 run. If I'm forced to bag hold longer than that, that's sometimes going to be necessary. But we do see IPOs initially run up, but then over time, within the first year, there's more of first of all, they're very volatile. When the market sells off, one of the first things people will sell off is any new IPOs that they're holding. We see a lot of pullbacks, especially once the lockup period expires. So when a company does their IPO, they're coming to market with a limited number of shares, and all of the insiders or the executives or the early investors, who put money into the company or earned stock options, they're subject to a lockup period, which is generally 180 days. So we're going to see limited supply and high demand for the first 180 days. We're going to see that catalyst off all the announcements of, hey, they're IPOing, now you can buy it. It's sort of a feeding frenzy where new stock is in the market. Everybody's looking for something new to buy, especially when the market's hot, and that will send the stock price up considerably. But if the debut price is too high and everybody's already bought in, or the float is too big, then there's just not much room for it to go up. And when I'm looking for trading opportunities, I'm looking for things that are a combination of, and that's kind of going to segue into the what I'm looking for, especially with low float IPOs. I'm looking for a combination of demand, social media buzz, what kind of retail allocation was offered, and then what is that pre-debut indication price. So with Portillo's and Dutch Brothers, I would say that traders hadn't quite fixated on the trend of these regional chains going on these insane runs off their debut. And by the time Sweetgreen's debuted, everyone was kind of like, this will be the next thing. It's a for sure thing. And we just saw the debut price go from kind of the high 30s all the way through the 40s into the 50s, from an IPO price that had originally ranged at like 22 to 25 and then priced at 28. And you're just going, geez, the valuation on this, how much more demand is left. And, that you have to factor all these into a debut play. So let's jump into what worked last week. And HashiCorp was the one that I said, like, of all I didn't like Nubank because the float was too high and it just dropped off the debut and has kind of come back into the debut price. But with close to 3 million shares, you're just not going to see that much action. HashiCorp had just 15 million shares. And I ended up not playing it because it debuted right at the IPO price. The market's super shaky right now. There's other plays this week that I want to make sure I have my cash free for. And, growth and tech for a year or for a year and a half have been can't miss. Just play them at any price and they'll go up. HashiCorp ended up going up. It was gave you a 10% win if you bought in on the debut. You held up to about 88 would have been a target, and leveled out. Day two run. We talk about this day two media cycle, especially for even I wouldn't say HashiCorp's a brand name. I don't think my mom knows what HashiCorp is, but it did get enough investor interest in the overnight headlines saying the IPO went on, that it happened. People are like, oh, that's a strong core company. They have, incredible growth. We use that in my company. People came out the next morning, bought it up to, maybe 90 is your target there. But when we see this early day two media run, I like to, if I am holding any position for that, I like to sell this initial spike, trailing stop loss, follow it up. Often we see things kind of die off from there. One note to be said on this one is that when we do have a weak market, IPOs tend to price more conservatively, and that can be a good entry point. But we've got catalysts on the horizon, like Friday's inflation number, and this week now, we kind of expect. I don't know how much fear and we're pricing already into Jay Powell speaking, but the guy seems to have a negative effect on the market every time he opens his mouth. So I don't know how you can really take highly
That's true. I'm with you there.
So Matt, we do have a little bit less time today, so I want to make sure we
do the next things.
Yeah, I just want to make sure we have enough time to get through all the IPOs we have coming up this week.
So one point I want to make is that this strategy that I use is highly dependent on not playing every IPO. You start taking a few big wins, and big wins are very possible, and you start wanting to play every IPO. So a big part of what I'm doing and assess, in my research each week, and sign up for the newsletter at IPOwarriors.com. I'll break things down in more detail. I send that out usually on Tuesday before the IPOs start. So I want to be identifying which ones have good chances to play. I'm going to focus on those, and which ones are definitely not worth playing. And the key considerations are, especially for low float, where right now we have one or two big names going live, and the rest are sort of obscure low float IPOs, which actually have been more profitable for me than even the big blockbuster names. So low float used to be kind of like 5 to 10 million shares. Now there's a whole bunch of these kind of specialty underwriters that are almost competing with each other to bring these companies live with low floats. And the number has now, I'd say, gone down to like low float that gets the day traders' attention, which brings the demand, is kind of 3 million shares and under. I'm gonna look at who's the underwriter. If it's Boasted Securities, I'm very keen. They've had a lot of highly, IPO debuts with high upside. Companies like Maxim and Think Equity are kind of hit and miss. Companies like Roth have not done very well. Biotechs, there was a time a few months ago when biotech low floats were still kind of worth playing and still getting attention. Now they're not. Now it's kind of like, it's not biotech. Okay, it's interesting. And we have some on this week. Social buzz, you want to look and see, are people talking about it on Reddit? Are people talking about it on Twitter? If not, there's just not going to be demand and there's no point in getting into it. The retail allocation, Webull, IPO, Webull, Robinhood, E-Trade, they're all giving retail allocation request opportunities now. If you put in a request and you don't get any allocation, that's actually a good thing. It indicates that there's high demand and a good chance that this goes up. If they do give you any allocation and it's significant, that's a sign that there's not a lot of demand. They're giving away, shares for, to normal traders like us. And who's left to want to buy after retail gets their allocations? Warrants complicate things. You'll see a stock that is, the float says 5 million or 2 million shares, but then there's it's actually 2 million units, and that equates to 2 million units or 2 million shares and 2 million warrants. That means 4 million shares, and it ends up kind of confusing traders. It shows that, and then the IPO price will be $4.50 with the IPO at $5, but everybody got 2 shares really. So it just tanks down to, below $3. Those aren't worth playing. You want to be aware of lockup periods, especially if you think you're getting into something with the low float, and actually the lockup period might be the day of the IPO, or a week later. That's kind of negates the whole low float hypothesis. And then you want to look at that pre-debut indication. You want to see something with a premium. You want to see something priced at $5 and go live at like $8 or $9. As counterintuitive as that sounds, when the pre-debut indication is low, that means nobody's buying it and everybody's trying to dump. Then you have to worry about it just dropping out, and there's no real indication, especially with these more obscure companies, that you're going to get a comeback. So there's 3 that I want to focus on here, and then we'll just blow through the rest as like very quickly say why they're not. This one is interesting. This is Fresh Grapes, VINE. This is a low carbs wine producer in the affordable luxe category with omni-channel distribution. They do have some revenue. If you're not looking at this company really for the financials or the business opportunity or anything else. What you're looking at is the ultra low float, 2.2 million shares, and the underwriter is Boasted Securities. So this one is worth watching to see if there is demand. I know that it's sold out on Webull last Friday. If people are talking about it, if the indication price is high, I'm not going to go for a big play on this, but it might be fun to be involved with this one. If you get one halt up, or you get a run up, you might take some quick profits. But it's not the sexiest of the group, and I don't want to get stuck in a position for what's coming later in the week. The only mainstream IPO this week is Samsara. This is an Internet of Things play, which is why their ticker is cleverly IoT. They do software as a system. It's a SaaS that does business solutions for fleet management and vehicles. So basically tagging every vehicle in a fleet with IoT devices and then helping people manage their fleet vehicles. Their growth has been very strong. And in the past, this would be a sort of no-brainer to play. This is going to be Wednesday, which is when JPOW speaks. So,
that'll be fun.
Yeah, it wouldn't surprise me if they pulled this. But revenue, these are incredibly strong numbers. 74% in the 9 months ending October 30th. Gross profit up 81%. The year-on-year revenue increase is 109% to 2021 to 2022. 144% 2021 to 20. These should be 2021 versus 2020. My mistake there. They have strong margins. They are all, across operating profits, net income, and cash flow. They're all negative, but they're all moving in the right direction. They have, this is also a mistake, it's 115. Just check that because that's annoying. 115. These go up on the website, so if you want to download these later and check them out, I try to correct them afterwards. The mid-range pricing is 2150, which gives them a 26x revenue multiple, which is already kind of high in this market. And I'm starting to, when the market's strong and everyone's buying growth, these numbers don't matter at all. The hype can carry this up to 40x, 50x, and then they'll settle down later on. But in this market, it seems to matter more. And already at 26, that means I don't really want to buy this above like 24. And I don't really see it going up with 35 million share float. So again, right now, I'm very, IPO trades tend to reflect strength in the market. And while we do get better, more attractive entry points, if this debuts at like 18 or 17, you might say, well, okay, it can only come up from there. IPO sellers won't be dumping at a loss on something like this. But again, JPOW talks on Wednesday. I don't know if I want to take any positions on Wednesday.
You know what? That seems to be how the overall market feels today, Matt.
Yeah, I don't see people, I got a haircut to go along with my portfolio.
Yeah, nice. Hey, badooch. All right.
Okay, so here I'm just going to give one example, and then I'll apply this to all the others. GNTA is a clinical stage biotech, blah, 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 cancer applications, biotech. Even though it's a super low float, it's just these haven't done well recently. There's, there was a time about 3 or 4 months ago where everything low float was getting targeted. Where these have done well is people let them drop off. They accumulate under, say, $3 if they debut at $4 to $5, and then they hold on to them. And eventually, a headline comes along, and since they're low float to begin with, they just blow up. We saw, I think it was KTTA. We saw ABBO. Any of these super low float, IINN. A lot of these eventually, and hopefully within 2 or 3 months, if you bought the IPO. They catch a headline, they squeeze, and they go up. So I keep a list of these and kind of watch for them to drop down to absurdly low prices. But playing the IPO debut just on a low float here is not working right now. We saw it last week with CINT. We saw it with NRSN. They both did the same thing. They priced at $5 with a warrant, debuted at about $4.50, $4 to $4.50. And just fell off to, I think both of them are under about $3.50 now. So I'm just going to put this at low float biotech. But before you move on, this is the one I want to show you guys. This is Sidus Space. This is SIDU. This is a low-cost satellite technology. They recently received a NASA contract, and the underwriter is Bosted Securities. There's already a ton of social media buzz around this one. There's an ultra-low float, just 3 million shares. It was available, I don't know if it still is, on Webull. I put in an allocation request, and that will kind of tell me everything I need to know. If I get, 100 shares, then I can say, okay, well, maybe I, misread this. If I get, 2 shares or 5 shares, then I can say, all right, well, that's not enough for people who got allocations to, even if everybody sells on the debut. I think a lot of people will hold. But this is the kind of play that has just done phenomenally. And when we get that opening right into a halt, which I thoroughly expect this one to do, that's when you really have to start managing your trade. If you've taken a big position, you probably need to take some out of the initial halt. But this seriously could do, 2 or 3 halts. And my strategy is generally by the 3rd halt to sell everything. I probably wouldn't hold past the 2nd halt on something like this. But again, you can look at the level 2 data and see, if you're seeing multiple buy walls, that to me is a sign that things will continue upward. If I see one buy wall right at the halt price, then it's probably time to say, okay, well, that was fun, get out. But this one is about as close to a lock as I can, forecast in an IPO, especially with a weak market. Not a lot of other, day traders will flock to this one. If there's not a lot of other opportunities to day trade something, then you have to look at this as a, as a strong debut play. And if you look at it, it's low float. It's the right underwriter. It's got the social media buzz. It's not a biotech. Space is kind of cool these days. These guys have revenue. They have a very strong CEO. It's not just a gimmicky, I mean, it is gimmicky, but it's not a BS company. You don't want to be holding this for 2 days. You don't want to be even maybe an end of day run, maybe an early day 2 spike. But this isn't going to run for, into next week. You get in, you take your profits, you get out, you take an early weekend. The last 3, again, low float, biotech, think equity. No thanks. Low float, biotech, medicine delivery is interesting, but no, you don't play these. Bioeconomics, no, skip. Don't even, you can try to extract some profit off an initial dip and maybe a spike, but even there, people aren't piling in like they used to. If you want to take these, put them on your calendar, make a list of them. Here's another one: FDA approved device for remote pregnancy monitoring.
Matt,
this one's weird because the float seems to be only 766,000 shares. Yeah.
That's weird. Before I let you go, there's a question about Nubank, because you made a comment about Nubank's float, and can you just elaborate on that real fast, and then we got to hop.
Sure. So Nubank was incredibly. Now it's, I think, the largest by market cap, the largest financial institution in the world. I heard something like that. It's $48 billion. The float is 289 million. There is an additional 46 million shares available to the underwriter as an allocation option. So the underwriter has an option to purchase more shares after the IPO. It was also dual listed in Brazil and America. So it's not like the Brazilian, where this company, I guess, started. It's not like their people who are interested in that are going to be buying in, off of the American market. So it's an interesting company, and maybe it's a long-term hold, but it priced at, I think, $9, debuted at, debuted up at 11. Hold on, give me 1 second. It debuted at 11.38. It opened at 11.25. Jumped up very quickly to 12.20. Too fast to really get in a trade there, and then it dropped out. So when we see super high float IPOs, we have to kind of understand that, first of all, they gave a ton of, they were trying to sell so many shares, and it was on every platform. It was on E-Trade, it was on Webull, it was on Click IPO, it was on Robinhood, it was on TD Ameritrade, and people got pretty decent allocations who requested them. So when you see people getting those allocations, a lot of people might be like, oh, well, I wanted it and I got the IPO price, great. If they got an initial spike, they might sell right away, even if they're advised to hold it for 30 days. If they didn't get that spike and they're holding it, great, but they're not buying more. So you're not going to see a rush of new buyers if they already, once people have already been fed, they're not hungry. They're not going to, flock to something and buy more shares. When there's 290 shares to buy, how much demand has to be higher than supply to move the price up. So and so we saw it with Rivian. It went up and then cracked. It went way down, and then day two brought in. But no, I tend to kind of draw the line at about 50 million shares. After that, it's very suspect to me that we'll have demand outpace supply. 20 to 30 million shares, it has to be a pretty solid company at a pretty good price for me to feel interested. Under 20 million shares on a solid company feels great, but for real low float action, we're talking 5 million shares or less. So,
all right. Yeah. Matt Hammond, IPO Warriors. Matt joins us every single Monday. Always a pleasure, sir. We'll talk to you again next week. Thanks a lot.
Thanks, guys. Have a good week. Cheers.
All right. Let's pivot from IPOs to Forex here. Let's bring on our next guest. He's actually a new guest joining us for the first time today. Giles Coghlan is the chief currency analyst at HYCM. We're going to talk what is going on in Turkey. Aaron, do you know? Some crazy stuff.
I have literally no idea what's going on in
crazy
Turkey.
stuff. And we're also going to talk about the Fed and all that and how that impacts things. Let's bring Giles on now. How are we doing today, sir?
Yeah, doing great, Spencer. Aaron, great to be with you today. Really looking forward to our time.
You're so cheery. Thank
Yeah,
you for being
Spencer,
so cheap.
Spencer, I don't know if we've ever had this well dressed of a guest on our show.
No,
Oh,
He's
that's
making us
it.
look, he's making us look like schleps over here.
I am a show.
I've got to be on my
I'm-
best behavior for my first appearance, so I thought I'd brush up nicely for you all.
We appreciate that. I don't know if this is that kind of a show, but we appreciate that.
Where are you joining us from?
From the United Kingdom. Just
where-
outside
whereabouts?
Wolverhampton, Birmingham, the second city here in the UK.
Awesome.
Like,
awesome.
what do you mean by second city? Second city ever?
So London's the capital, and the second city is Birmingham.
Okay.
It's like Chicago, dude. Second city,
Interesting.
right? New York.
I would have guessed London, then you got what, like Liverpool, Manchester?
Yeah, they are sort of like higher cities, but Birmingham is the second city, and they're talking about doing a high-speed rail network between Birmingham and London just to try to link the capital with the second city and just sort of stimulate business more in the UK.
All right. We gotta start talking about. I gotta find out what's going on in Turkey here because I teased it. There's some crazy stuff happening in Turkey with regards to their currency
Yeah.
and their central bank. And basically, if you're not following the story, the Turkish lira is like tanking. Tell us what's happening over there.
Well, essentially what's happening is the president has a very unusual belief. And his belief is that high interest rates causes high inflation. Now, what actually happens is that when you have high inflation, a central bank will increase interest rates to keep inflation down. We're all very familiar with the high inflation story that's going across the world right now. And the concern is that central banks around the world are going to have to raise interest rates. But in Turkey, their inflation is up over 20%. But instead of raising interest rates, their president is saying, no. We mustn't raise interest rates to combat that high inflation. We have to cut interest rates. We have to make interest rates lower. So this is what's fueling this incredible weakness in the lira because it's such a unusual belief and it's so counter to how the financial world works that his unique beliefs is actually causing a crisis within the country. That in a nutshell is what's going on. So you've got President Erdogan, telling his country, no, the high inflation is being caused by high interest rates. The last thing we ever want to do is raise interest rates. It means that the central bank is politically handicapped and is unable to raise the necessary interest rates. It probably needs to raise interest rates by between 5 and 10% to start bringing inflation down.
Oh my!
But instead, President Erdogan is like saying, that's the last thing we ever want to do. In fact, we want to cut interest rates. That's the heart of the problem. And that's why the lira keeps weakening and weakening and weakening.
All right, you hear that, everyone? 20% inflation. Quit your crying. It could always be worse.
Yeah. So, Spencer, that means, for instance, you might go to the shops in the morning, and by the time you come back in the evening, the price has changed. That's the kind of inflation you're talking about.
So, like, the economic theory is, lowered rates combats inflation. Do we know why he thinks otherwise, or no?
Spencer, no, I haven't gone in depth into what's driving his philosophy.
Okay.
I simply know it's a very unusual and it's counter to the received wisdom around the world. And in fact, the only tool that I'm aware of that a central bank has to combat rising inflation is raising interest rates. That's, for me as an FX trader, it's so reliable. When it looks like a country's going to be raising interest rates or inflation's going higher, you expect interest rates to rise, so you expect the currency to appreciate. Why he holds that belief, Spencer, I really have no idea.
All right, that brings us to America, where we are experiencing inflation, and we expect to raise interest rates in the next year. Yeah. So we have, of course, a Federal Reserve meeting on Wednesday. Wednesday. They're gonna hopefully give some more clarity and outline their plan for the next few months or so. Or beyond that. But what is the Forex market saying about what it thinks will happen on Wednesday.
Yeah, it's been really roller coaster in terms of expectation for what's happening with the Fed, and there's a lot of uncertainty, Spencer. I'll give you the big narrative, and so you can see, and I'll try and outline both kind of situations. So the last CPI print on Friday was really high, but President Biden had given out a message the day before saying that the reason for the high inflation was due to high energy prices. So investors started fearing that inflation was going to be above 7%. And the last two inflation readings out for the US have all exceeded expectations. Now, it was high. US inflation is up to that 7% level, but it wasn't as high as the market was fearing. So ironically, we've had some interest rate hike expectations dial back since Friday. There's been a measure of relief that although inflation is really high, it perhaps isn't as high as feared. And now Fed fund futures are pricing in about 2 rate hikes for 2022. So what people are going to be looking at when it comes to Jay Powell speaking is they're going to be looking to what extent does he taper more quickly? He's already said he's going to taper bond purchases more quickly, because the timeline is this. He said, I've got to taper, and then when tapering's done, then we'll raise interest rates. So what the market is thinking is the end of the tapering is also the beginning of raising interest rates. So if he takes longer to taper, that means the interest rates will start rising later. If he takes shorter to taper, it'll mean interest rates will start rising sooner. So the speed at which the taper takes place is going to be important. And then the hint to which he's going to link the end of tapering to the beginning of interest rates is going to be important. And that's how the market's going to be analyzing how quickly the Fed's going. Many people, and if you look at the long end of the bond yield curve, it's starting to flatten. So it means that investors are thinking that the Fed is about to make a policy mistake. They're about to raise interest rates very quickly in the short term. That's then going to slow down growth in the medium term. And so that's why there's no interest rate hikes penciled in for 2025. So 2024 to 2025, there's actually an interest rate cut.
So wait, I have a dumb question to ask. The tapering, all that really means, I thought that was referring to the Fed slowing down, and I guess the end point is stopping, right?
Yep.
Their asset purchases. Is that correct?
Yeah, that's it. Yeah.
Okay. So the end point there is no more buying. And then it's a question of when and how quickly do they sell? Because that's what they were doing from the last recession. And then 5 years ago, right, they were like, all right, we're selling. We're going to unwind our balance sheet. And that took several years. And then all that progress was undone, I think, by the pandemic. But I just want to clarify that the end point of the tapering is no more bond buying, right?
Yeah.
Okay.
And the reason that markets are concerned about that is because they are equating the end of that tapering to the beginning of interest rate hikes. Even though the Fed have explicitly said that's not the case, the markets are saying, well, what else is there to do?
Okay.
So I'm curious. So in the last 15 years, at least here in the United States, we've had 2 major recessions, of course, in 07 and 08, and then with the COVID-19 pandemic that caused the markets to crash. And the Fed's response was pretty different this time around. They went with a big stimulus spending package that, of course, had a better effect on jobs, but now we're seeing the outcome with inflation. If you had to guess, if we saw another big recession or stock market crash like that in the next 2, 3, 4 years, how do you think the response would differ from what we saw this time around with COVID-19? Do you think they would revert back to more with the conservativeness in 07, 08, or what do you think they would do differently?
Yeah, I think, Aaron, that there's been a fundamental shift in society about what level of pain we're prepared to see companies and individuals go through. So I think quantitative easing, asset purchasing is just going to be part of our financial framework for the foreseeable future. Now, if you look at the debt to GDP ratio, here in the UK, it's about 100%. Now, some people become very alarmed at that debt to GDP ratio. It's very high. But if you compare that, say, to Japan, their debt to GDP ratio is about 200 to 300%. Now, the reason this is relevant is because this is how much money countries are having to borrow to support their economies. Now, if you think of an average person's mortgage, they might be borrowing what, 3, 4, 5 times their earnings in order to pay for their mortgage. So I think we're going to have a philosophical change that we're going to become much more comfortable with debt as a society, that generally companies are going to move more to the Japanese way of thinking. And I think that there'll be a greater tolerance of debt. There has to be, because of COVID-19 and the huge amount of debt that countries have taken on. But I just can't see a situation, Aaron, where a central bank or a government is going to say, okay, we're going to have some fiscal conservatism now. And, oh, sorry, the stock market's fallen 40%. Oh, and sorry, unemployment is 20%. They're just going to get voted out, aren't they? And then they're going to be a new government will be voted in that say we're going to borrow our way out of the problem. So I think we are in a huge systemic problem, but I think what will happen, people will just become more tolerant to debt levels. So I don't think it is a massive issue in our generation. I would be surprised for it to be an issue in our generation. But at some point, someone's going to say, well, how much debt is too much?
Right. And that's why I think it's interesting you brought up the Japan example. I think a lot of people that are...
It's always Japan. Japan always gets brought up.
Well, if we're talking about what we could call modern monetary theory, a lot of proponents of that theory felt very vindicated throughout the first year of the COVID-19 pandemic after that said, hey, look, we can take on this debt. It will help us with growth immediately. But then now those same people may be fielding questions about why is inflation the highest it's been in the past 30 years, et cetera. So it's so fascinating to me, this whole field, because economics in general it's not something that's set in stone, black and white. There's all these theories being thrown around there, and then we have to kind of adjust as we go.
I mean, you look at Japan and you think of inflation, they've had disinflationary forces for years. So their level of borrowing did not result in a huge amount of inflation for Japan. So that narrative about whether borrowing more necessarily equates to high inflation, I think is an interesting one. And if you compare, say, the Reserve Bank of Australia, the Bank of England, the European Central Bank, their mandate is very much that inflation is transitory and very much linked to that supply chain issue, as people haven't been able to buy services due to COVID-19. They haven't been able to go to restaurants, they haven't been able to go out to meals. Instead, they've been spending their money on products and goods and services. Those goods haven't been able to be manufactured as quickly, so we've had the supply chain bottlenecks. So I think that narrative does make sense. And if you notice the US, I've noticed in the US that inflation has become very politicized. And it was very interesting.
No kidding.
You know what I mean? And seeing how politicized it was means that's a difficulty for monetary policy. And I think that's why Powell had to shift his narrative. Whereas if you look at the ease, the last Reserve Bank of Australia meeting, they talked about inflation being transitory. You look at the ease of Christine Lagarde talking about inflation being transitory. You look at the Bank of England, the confidence they stated in their last central bank forecast that inflation would peak at 5% and then drop. That, for me, the only explanation that I can have for that is politicization. Now, that doesn't mean that it's not going to happen, but it means that there's a different interpretation of inflation circling around the globe.
So, I'm curious if Spencer here, I'm not going to make the argument, but if he wanted to make the argument that he said the inflation that we're seeing in the United States has less to do with the Fed's policy and the debt and the spending, and more to do with the supply chain bottlenecks and certain goods becoming more expensive because of shortage of supply. You know, would you see that as a legitimate argument, or would you say, no, this has more to do with what's going on with the Fed and the central bank?
No, that makes sense to me, because if you think about it, a lot of people's incomes have not been badly impacted by COVID-19. I know some people's have been, and it's been tragic for some individuals. I understand that, and there's been some tragedies. But there has been some examples where a large amount of people have able to use the government support, and they've large amounts of savings. So what do you do with all those savings? Well, you might think to yourself, oh, I would like to go on holiday, but I can't go on holiday because of COVID-19. Or you might think, I might like to go out to my favorite restaurant. I can't go out to my favorite restaurant. So what do you suddenly look at? You think, oh gosh, I want to get a Peloton exercise bike. I want to buy a new laptop. I want to buy some good, maybe a new car. So you all of a sudden direct all that pent up savings into some specific goods. But then, of course, we've got supply chain issues, and those goods can't satisfy the demand. So I find that narrative compelling, Aaron, because it seems to be logical. It seems to make sense of the pent-up savings, the desire for goods over and above services that would normally absorb some of that extra cash aren't able to. So the supply chain issues have also been struck due to COVID-19 logistics and supply issues. So that narrative is logical. And given the fact, let's go back, 2 years? Do you remember all the narratives going around saying, you know what, inflation, we'll never see inflation again because we've got a globalized marketplace. So there's someone in India who can do your job. Okay, so yes, you might feel confident over there in California or in the US, but you know what? There's a guy in Delhi who'll do it for 1/5 of your price. And as a consequence, wages are not going to rise. Has globalization ended? No. Has it increased? Yes, because digitalization has got more. Look at us now. We're talking digital. So that means all of a sudden you've got a globalized workforce. That means the pressure on wages is going to be down because there's someone that can do my job and your job anywhere in the globe.
But of course, that's not what's happened in the last year and a half.
How can anything else happen, Spencer? Because the fact that you could do a digital job anywhere in the world.
Right. But wages are actually going up for the first time in God knows how long. So
yes, but the reason wages are going up, Spencer, is for a totally different reason, and that's because take an example here in the UK, right? So there's a restaurant owner. He wants to open his restaurant again. Oh, all his low-paid staff who've been subsidized by the government don't desperately need a job anymore. So we said, oh, can you come back and work for me? And they say, no, sorry, I'm not really interested in doing your 2-bit job anymore. Okay, if I pay you 20%, will you come back? And the rest, and they goes, yeah, well, okay, I'll do it for 20% extra. So yes, wages are going up, but that's only because all of the pent-up savings and all of the unique situations we have of COVID, as soon as that goes, that will be gone.
All right. Yes, I feel like we need to caveat here that more consumer spending is better than less consumer spending, right? So like the opposite, right? Okay. So,
that's good.
Right, that's good.
Not if prices rise, Spencer. But say that restaurant owner says, okay, I've had to employ the chef 20% more. I've had to employ my waiter 20% more. Do you know what? I'm going to raise my prices by 25%.
Well, of course,
because I'm worried.
Right. So then if the wages at this restaurant go up, and I assume the wages aren't gonna, 6 months from now, the owner's not gonna say, all right, okay, inflation's going down. Now I'm gonna go back to paying you less than 20%. And likewise, I wouldn't expect him to make the menu prices go down as well. So if inflation does go down, but then the wages stay higher and the prices for the food stays higher, what's the effective difference? I mean, wouldn't that be kind of similar to inflation just staying the same where it is?
You've got it, Aaron. That is what the Bank of England are worried about. So tomorrow we've got jobs data coming out in the UK. Now, the Bank of England are worried about rising wages. If wages rise, the risk is, as you've just put you put the hammer on the head, inflation becomes systemic. It's out of control, right? So I'm looking at wages tomorrow, and if I see wages popping up like 3.9%, 4.2%, I know the pressure's on the Bank of England. And that means the pound's going to start potentially rising because investors will be afraid. They'll think the Bank of England has been spooked. So on one hand, they've got COVID-19, they've got further restrictions, they want to keep monetary conditions easier. But on the other hand, oh my goodness, wages are rising, inflation is going to become systemic, we're going to have to raise interest rates. And then you see you're caught between the devil and the deep blue sea. And that is the place we're in. So what will happen? Look, hey, I'm not a prophet, neither are you. We don't know how it's going to happen, but we can see the problem. And that's the problem that central banks around the world are going to be wrestling with. And my simple point is this. We've got globalization and automation on the one hand. That is a long-term depressures inflation. That is a disinflationary force which has been in effect for years. Despite all the QE that took place, despite all the doomsday, prophets saying that's it, inflation is going to be out of control. No, globalization, automation largely kept it under control. We're now in a situation that if the wages keep rising, if inflation becomes systemic, we could be in a situation where inflation does get out of control, and no one exactly knows what's going to happen. But that's the beauty for me is you're going to have the movements between central banks. They're going to be jockeying for position, and that moves currencies.
This conversation is endlessly interesting. I feel like we could go back and forth all day.
Yeah,
walking through the different scenarios, but we've kept you long enough. Giles Coghlan is the chief market strategist chief currency analyst at HYCM, and we've gotten some great feedback. We will definitely have to have you back on the show again soon. I know it's later for you, so thanks a lot for coming on. We appreciate the time today.
It's almost 5 or 6 p.m. over there, so go have a pint for us while we're just starting our afternoon.
It's been an absolute pleasure, and if ever you want anything on currencies in particular or any central bank decisions, I can absolutely do a great job for you.
All right, cheers. All right. Hey, do you like my cheers there? That was good. Okay, that was an endlessly interesting conversation. And this is what I love.
Well, for us, I mean, for some people, maybe endlessly boring.
Well, this is what I love and hate about economics at the same time. Is like, it's all whatever narrative you can tell yourself but it's all theoretical. Because we saw like the second shit hit the fan last year, right? A lot of textbooks went out the window, right? Modern monetary theory was laughed at, right? By means
before you're saying
right before MMT was this idea that you could pump endless money into the system and it wouldn't screw things up, and then that's what happened, and it didn't screw things up at first. And it was like, oh, all right. It's kind of
what we saw, I think, before we saw this level of inflation we're seeing with the U.S. dollar is we're seeing exactly what a lot of modern monetary theorists said would happen was that you would see inflation of certain assets, i.e. stocks, i.e. real estate. So before you saw the actual inflation of the dollar, you saw a lot of, we don't call it inflation in the stock market. We just call it going up, right. But right. You saw these prices increase in assets, in equities, in real estate. And for a lot of people, if you were invested in these assets that did inflate, they inflated at a higher rate than what we've seen with the U.S. dollar. So you would still come out on top.
Right.
And that's the thing, like you said, Spencer, with just economists and theories in general, right. Is it's not black and white. And I remember, I think I saw a tweet sometime, or maybe they were talking about a podcast, but there are few other jobs out there that you can be so wrong
all the time,
so many times, and then still have a job. If you're an economist, you can be wrong every single day for 5 years, and someone's still paying you to put these narratives and takes out there. And like,
it's crazy.
Giles, I don't know. Giles, like he said, it's become a very politicized issue in the United States, not just here in the United States, but now we have to like work that frame around the narrative too, right? We can't talk about inflation without it being a political discussion.
Yeah. So on the one hand, that's why I love economics, because it is so theoretical. But on the other hand, that's why I hate it, because like, for example, you can use the data to paint a narrative of, oh, like consumers are flush with cash, all these excess savings. Well, if that doesn't apply to me, then screw the narrative. It's so personal finance is so personal to you that, oh, nice chart there. It's so personal to you that if you don't, if for whatever reason your situation does not line up with whatever the broader economic narrative is, and like, then it's useless to you. Then it's pointless, because people may policymakers may be making policy under the guise of, oh yes, broadly speaking, consumers have a lot of savings, or broadly speaking, this is happening. But if you're not in that majority group, then you're shit out of luck, frankly. Which is why it can be so frustrating at times. Nice chart here, AB. I like it.
Yeah, this is just a chart of the search term inflation on Google Trends. So you can see this time last year we were at a 47. This just gauges the search interest on a scale from 0 to 100. Currently we're at a 70, peaking at an 86 about a month ago. I think that's when that other CPI data came out.
Wait, what was that high? Was that
Yeah,
April?
back here.
Was that May?
May 100. That was our first really hot CPI print.
Wonder what. Okay.
And so here's my hunch, Spencer, is that I don't know, 6 months from now, and we can put a launch bet on this if you would like to.
Okay.
I don't know if you would take the other side, but I am going to guess that it's 6 months from now, so we'll call it June 15th or whatever, that we'll see this number well below where it's at now, 70, well below 50. I don't know if this is going to be...
Let's do May 15th, because that's my birthday.
Okay, mine's May 5th.
Oh, I didn't know that. All right, so May 15th?
May 15th.
Okay.
I think the inflation search term trend is going to be below 50.
What are we at now, 60-something?
We're at 70 right now.
70?
Do you want to see a really interesting one?
Yeah, can we compare it to something? What's Afghanistan? Oh, yeah. Yeah, you showed me this one. Wait, zoom way out, though.
This might be this is a year, but this is how short term our memory is as Americans. So for like a week, when all anyone wanted to talk about was the pulling out of Afghanistan and how badly that went, the search term went up to 100, and then quickly 2 weeks later, it's back down to essentially 0.
Wait, Shelly said do transitory. Let's do transitory. And on the Afghanistan thing, I remember, so the week when that all was just starting out, and I remember, AB, we were in the office, and you like walked up behind me, and you looked up on the TV, and they were talking about Afghanistan, and you said, Afghanistan? What year is it? 2001? Then like 2 days later,
Yeah.
2 days later, we put out Afghanistan, and it was wall-to-wall coverage for like a week straight.
That was it was actually on Fox News Business or whatever, and they were talking about Afghanistan and the Taliban before it was like the biggest headline in news. So they were actually a couple days before early that, and it was.
I just remember your comment was like, "What year is it? 2001?" And the next thing we know, it's wall-to-wall Afghanistan for 2 weeks straight.
For 2 weeks straight, yeah. Now I would love to see like a chart of, if at all, if Afghanistan has been mentioned once in the last 2 weeks on any of the mainstream
Probably not
networks.
Okay, so wait,
that's
transitory.
CNN.
This is Google search for the word transitory.
Yeah, I think that, so it got up to 100. This might have been when Powell said, all right, we're going to lay this word to rest. But yeah, I mean, it's like inflation. It's been going up and down.
So there is inflation in the search for transitory.
Yeah.
Okay, but the question was inflation above or below 50, and you're saying it's going to be below 50. I'll take the other side of that bet.
All right, so you think more people are going to be searching for inflation in 6 months from now, we'll call it? Or
No,
May?
well, more relative to what you think, yes.
All right, I'm going to pull up my pro. Let's talk some stocks, Spencer.
Yeah, and then before we do that, we hear you in the chat. We take your feedback seriously. We will do our very best to get more people with British accents, or any accent for that matter, on this show. They seem to want that. They seem to want more Brits. That's what they said. I mean, you and
Accents are always fun, Spencer. What can I say?
SF says the answer is yes to your Afghanistan question. Well, there we go. Okay, we will get more Brits on the show. We will do our very best. If you guys want like a specific topic to be discussed, like let us know, whether it's like what we just talked about or whether it's like you want more Forex specific stuff or whatever you want to talk about. Let us know. We'll try to find someone who knows more about it than we do. Okay, why are you looking at Sunrun right now?
I'm looking at Sunrun because I'm looking at this space in general right now, Spencer. Clean energy, solar, it's here. It's the future. It's going to, take over eventually.
Yeah, they've been saying that for 20 years.
I know, but now it's time, and I'm going to put my money where my mouth is. Well, I already have. Sunrun is in my long-term investment portfolio. To me, the chart looks good right here. We're sitting right at previous support. I want to see us swing back up here. So I'm adding Run and Array to my watch list this week. Thoughts?
My thoughts are solar panels are getting cheaper and cheaper, and they have been for like the last decade. And that's one of like the.
So you think that's not going to be good for these companies' revenues and
well, that's been the argument, and it's been mostly right. I not mostly right, because if you look at like the TAN, for example, you pull up the TAN ETF, that's been, I think it's made new highs this year. The thing with solar is it's so cyclical, man. I mean, it's when it's hot, and when it's not, man, it sucks. Like these solar stocks, like they can really, really drag.
Well, I think, Spencer, that's why I like these as long-term investments. Like you said, they're very cyclical, so they can get volatile. If you buy Sunrun, it could go down 10% tomorrow. But do I think that this stock, let me pull back Sunrun's up chart. Do I think Sunrun will be worth more than $42 5 years from now?
Can we look up some valuations? What's the PE here? Do they have earnings? I don't even know. Can we go down?
Yeah, let's check this out.
All right, what do we got here?
No, we don't have the PE.
Oh wait, we have what? We don't even have a trailing PE. That's not. Oh wait, all right, they know earnings. All right, price of sales of 5.7. Holy cow, that's a lot, man. All right,
man. People are willing to pay that premium for companies that are going to be making a lot of money down the road. So I don't know if you have a favorite company in the chat in the solar space, let me know, because mine are Sunrun and Array, ticker ARRY, and Run RUN.
You guys know that I'm generally loath to pick individual stocks for this reason, because we could spend weeks or months looking at financial statements and balance sheets and insider transactions and all that stuff, and it could still not matter for the stock. So you guys know that I'm generally loath to do that, but I'm open to ideas here. Props to you for sticking your neck out, man. You've got two names, Array and Sunrun, and you're taking a stand and you're planting your flag and you're drawing a line and you're doing all the cliches. So props for that.
Yeah, another one that we added to our watch list last week that I also like the long-term story on is QuantumScape. So this is one that, like I've talked about before, it's very highly speculative. So a lot of these highly speculative tech names have gotten beaten down over the last few months. If we look at this chart, let me get it pulled up, we can see that, look, this stock was trading at nearly $40 in November, and currently it's a $23 stock. So that tells me that 50% of this stock's value has been wiped out in the last month. Do I really think this company is worth 50% less than it was valued at a month ago? No, not at all.
Well, was it worth that in the first place? That's the question.
But it shows what investors are flowing money into. And for a minute there, right here, it was going back into highly speculative growth stocks, tech, whatever. And then we saw this sell-off. This one for me is something that I have just a small allocation of my long portfolio, because if QuantumScape's story does work out, if their technology does work out and being like an ubiquitous technology behind EV batteries across the board, whether it's for Tesla, Ford, GM, whoever, then this stock will 10x.
I have a dumb question. What do they do?
So they have a single state like lithium ion battery that's supposed to be the future of EV batteries. So it's all pre-sale. They're not selling anything now. So it's one of those that
pre-revenue.
Yeah, it's like a home run. It's like if this hits, it's a grand slam.
Okay.
Is it very risky? Yes.
Okay. It's good to have a couple of these. It's probably good to have a couple long shots.
I think that's how you beat the market is you find these diamonds in the rough, you get in early. And if you're wrong on, say, if you have a basket of 10 of them and you're wrong on 7 of them and then 3 of them work out, you still finish in the green.
I've got a couple, long shots myself. You guys know I've got SoFi. That's a long shot. I've got some cannabis. Those are long shots as well. So it's good to have some long shots in your portfolio. No doubt. Someone just made a comment in the chat, and I forgot what it was. Someone dropped Enphase in there. Fear King dropped Enphase. Christian's got SunPower, SPWR, Deepolex, Vroom, VRM. Not solar, I don't think, but maybe it is. I don't know. I don't actually know too much about solar.
How about on the other side? I mean, on the kind of value side, do we have any stocks that we like right now that are maybe a little bit less speculative?
You're asking for underloved value names?
Yeah, like what's Costco looking like?
No, dude, Costco is a monster.
But I mean,
Costco is a beast. Fun fact: I just listened to a podcast about Costco this morning, and how their business is structured. That Costco that company's you can't stop it.
This is actually interesting, the chart. So we're right at previous all-time highs. If we break through this, we could see a little bit of a breakout in Costco. Trading right now at $558 a share. This was a stock, Spencer, that before the COVID crash was at $360.
Sure.
So it's almost gone up 100% from its pre-COVID levels.
Sure.
One of the big winners.
I want to ask you, do you know, on average, and this goes to the chat, I'm going to ask everyone this, how long it takes a new Costco location to get to profitability? Costco spends...
So you're taking in the fixed cost of actually
building
the building.
So I think it costs Costco somewhere in the neighborhood of like $100 million, maybe a little bit less, maybe 75 to 100, to build and open a new location. They do like 20 or 30 of those a year. Does anyone want to guess? I listened to a great podcast on this morning. OPEX says 1 year. It is more than 1 year. Do you want to guess how long it takes Costco to break even?
3.5 years.
It is more than 3.5 years.
10 years.
It is not quite 10 years. It is like 8 to 9 years.
8 to 9 years.
That's how long it takes Costco to break even on a new store.
10
months, that would be impressive.
And then after the 8 to 9 years, it's just printing money every day.
Basically, they never close locations. They never close locations.
So Chris Katje, shout out Chris Katje in the chat, brought up this one, Formula One. So Chris, let me understand. So would this be analogous to me just buying stock in the MLB? Is it truly the league that you can buy stock in right here?
Well, it's the parent company that owns Liberty Media, same company that owns the Atlanta Braves, right? The parent company. You can buy that too if you want.
Yeah, I think it's Bat B.
I don't remember what it is.
No,
it's L. It's L. It's got like 5 symbols, man. I don't know. It's 5 letters. It's a long one. I'm not quite up to the ownership structure here. I do have a hunch that owning this gets you nothing. It gets you no voting rights. It gets you nothing other than some future profits. But this share doesn't come with anything. I think there's a different share class for
over the last 20 years or so, we've seen the valuation of both sports teams and leagues just like increase tremendously. So I like this. I want to have some exposure to the Formula One because like Chris said, that this Formula One racing has just been growing a lot over the last 2 years. I mean, Spencer, you're not a guy that I would have pegged being someone talking about Formula One or whatever, but you've watched the Netflix show. I think a lot of people have also gotten into the sport by watching this Netflix show. I have friends that have never talked about racing in the past that have texted me saying, "Oh my God, do you see Verstappen beat Hamilton?" And it's like,
and you're like, "What?"
Yeah, I'm like, "What?" I don't know who either of those people are. Well, I do, but either way. I think this could be a good investment, but I would want to know the structure of like when the share prices go up. Is it just the same?
Well, it's not quite the same as the Green Bay Packers thing. The Packers thing gets you actually nothing. You get a piece of paper, You are not entitled to any perks, any future profits, any voting, nothing. You get nothing. That's not quite how Formula One is. You do obviously are entitled to future earnings, but I think that's all you get. You don't get anything else. You don't get to vote in decisions and things like that. That being said, I like.
But what's cool about being if you own shares of the Green Bay Packers, Spencer, is you can just tell your friends that you're a partial owner
Of the Packers.
Yeah.
Right.
So when you're watching the like last night when the Packers were playing the Bears, you can say hey, my team's playing, I gotta go. It's pretty cool.
That's why you buy it.
Yeah.
It's you buy it to give to your kid and your grandkid one day. The Formula One thing. So can we zoom in on that? So is that an all-time high today?
No.
No, not today.
No.
Okay.
But it's right around near all-time highs.
Because I did watch, not watch. I watched highlights. I didn't watch it live. I was not up to watch it live. But I saw the race yesterday and how it ended. And obviously it's, very controversial and a hot topic of discussion in the sports world. And the conspiracy, or one of the conspiracies yesterday was, they screwed this up because they know it'll be better for the next season of the Netflix show, right? This is the Netflix effect. They screwed up the race to make it better for the documentary that comes out, in a year.
Wait, how'd they screw up the race?
There was some controversy over the ending. Basically, there was a crash. So I'll explain this as
no spoilers. I'm gonna watch it on Netflix in like 6 months.
Okay, fine. No spoilers. There was a tie for first place going into the last race of the year, and since you don't want any spoilers, one guy was winning with like not a lot of laps to go, and then there was a crash.
Let's call him Hamilton.
Okay, Hamilton was winning with a handful of laps to go, and there was a crash, and while they were clearing the crash and they had a virtual safety car out there, they ruled that the cars that were in between the first place guy and the second place guy, we'll call him Schmappen, the cars that were in between them were allowed to pass the virtual safety car. And that, I guess, was not entirely what the rules said. And what that ended up doing was it let the second place guy catch up to the first place guy, and the second place guy had better tires, so he passed him, and it was a whole thing. But anyway, the point here, my point in bringing that up was, and I hope I explained that correctly, by the way. I think I did. But if I didn't, then feel free to correct me. My point was there's going to be a new season on Netflix next year. It'll probably be the biggest season yet. Is that in itself a catalyst for the Formula One stock?
Oh, the Netflix show is 100% a catalyst. Like I said,
right.
I think yourself included. There have been a lot of people that have been brought into the sport by the Netflix show. Wow, looking at the Netflix chart, this doesn't look pretty in the short term for Netflix. We see this double top up here. It'll be interesting if we see this continuing moving down, if we catch that support right here at around 600, or if we continue following this 550 level. But Netflix, they've been talking about, they've kind of been tapering expectations about its growth, saying, hey, look, we saw this crazy growth through the COVID-19 pandemic. We can't expect this same growth quarter over quarter. But Netflix, at the end of the day, is just one of those monster stocks out there, right? We can't talk about the biggest tech name stocks, whether you're talking about Tesla, Apple, Microsoft, without talking about Netflix. So this one to me, Spencer, where do you sit on Netflix right now? Are you bear or bull?
Yeah, I mean, the problem is it's been tough to be bearish against Netflix, but they themselves, like you said, have been trying very, very hard to damper expectations. And if you actually, the narrative that they've been trying to sell for the past couple of years has been, oh, forget the U.S. Look over here. Look over here. Look at the other. Look at India. Look at these other markets. Forget the U.S. Because obviously they've reached a saturation point in the U.S. and there are only so many people in the U.S. that can get Netflix accounts.
We got to be there, right? I don't know, like anyone. I don't have a single friend I feel like that I can say like, oh, hey, go watch this show on Netflix, and they're like, oh, I don't have access to a Netflix account. You either have your own or you have access to one.
My underlying theory that I like to subscribe to for investing and for business is that we live in a world where the rich get richer and the big get bigger, and it's much easier for the big guns, the established names to just keep on getting bigger and bigger. And Netflix is the king in their arena. Make no mistake.
Well, that's why last earnings report, Netflix talked a lot about Squid Game and kind of the impact that could have on its international markets, like you said, Spencer. And of course, in Asia, in the broader Asia region, there's a lot more people than in the United States. What that means is there's more potential customers. So by bringing in a larger market share of Asia, I mean, if Netflix had to choose, could they increase their market share by 10% in Asian markets or the U.S. markets? They'd choose the Asian markets because it's bigger. So I think going forward, we'll have to see how this plays out with Squid Game. Do they put a sustained effort into putting out more content like Squid Game that captures a larger Asian audience? And if so, I think that's very bullish for Netflix long term. Like I said, though, in the short term, maybe we're just going to be missing some catalysts in the near future, and the technicals on the chart doesn't look great to me. I'm sure our next guest, Chris Capre, coming on in about 10 minutes, may have some other thoughts about the chart that maybe I'm not seeing right now. But either way, a lot of these names that have just gone up so much throughout the COVID-19 pandemic, I feel like are kind of scaring off investors a little bit right now.
The other thing is, we're talking about inflation a lot today. Netflix has proven time and time again that they can increase the price of their subscription, and you and me and Aaron, we will pay for it.
Dude, I'm glad you brought that up.
Pay
because
for it.
Maybe we can make this a segment on the show. I have to go through all my subscriptions that I'm paying for because I know there are some that I don't use. Like I pay for a Disney Plus bundle that comes with Disney, Hulu, and ESPN Plus, and I'll occasionally use the ESPN Plus to watch a game or something that's not on our cable TV. But outside of that, I never use Hulu or Disney Plus, and I'm paying like $12. It's not a lot of money. It's like $12 a month or something. But still, like if I go through and I find 3 of those subscriptions, they add up.
You can't see my screen right now, but I actually have a list of all the subscriptions that I pay for.
See, I got to do that. Spencer's a lot more, like he's got his own spreadsheet. He's got
do
Excel
you
sheet.
guys want to see? There's not many of them. I can show you if you're interested. Like I actually keep track. I have a spreadsheet of everything in my financial life, and I keep track of all these subscriptions that I'm paying for, whether they're monthly or annual. And in total, I am paying $678 per year on subscriptions.
Is this just streaming subscriptions or
No, every subscription in my life. That includes Costco. That includes Hulu. That includes whatever news sites I pay for. $678. That's pretty good, I think. $678 per year. It's not bad. Anyway, let's move on.
I want to know. We saw the news that CNN is coming out with CNN Plus.
Mm-hmm.
Who's gonna pay for that?
Yeah, right. Probably. I mean, not me because I don't even pay for Netflix, man. So, all right. Hey, Aaron, you were the one that titled the show today. You made it about Apple and Tesla. We should probably talk about that. Why did you make it that?
Yeah, so I'm sure a lot of our audience saw, but today we got the news that Elon Musk has been officially named the Time Person of the Year for 2021. So Elon Musk has been a huge name in finance and business over the last, 5, 6, 7, 8 years. But in the last year, Elon Musk has had a number of accomplishments, including going on Saturday Night Live, becoming the face of Dogecoin, which quickly became the hottest cryptocurrency in the world for a few months back in, January to April, we'll call it. He saw his company Tesla become a $1 trillion company. He became the richest person in the world for a time being. I don't know if he still currently is or if that's back to Jeffy Bezos from Amazon. But either way, a very eventful year for Elon Musk. I'm looking forward to the Time article about him being the person of the year. And then Apple, we've been talking about it, I guess, for the past week or so, but Apple is closing in on becoming the first $1 trillion company.
$3 trillion.
The first what did I say?
Trillion.
3 trillion. Yeah, the first $3 trillion company. I still remember when Apple became a $1 trillion company. I think it was in 2015 or so.
No, it was like 2018.
Really?
Yeah, it was 2018, and then it took them like 2 years to go from 1 to 2.
Maybe I'm thinking of when Apple surpassed. Who was it? Was it Microsoft? Apple surpassed someone to become the most valuable company in the world. This was back in like 2015. I want to say 2012.
Microsoft.
Might have been like
I don't know. It took Apple the entire history of its company to get worth $1 trillion. It took them a year and a half to go from 1 to 2 trillion, or no, 2 years. 2 years to go from 1 to 2, and it's taken them a little less than a year and a half to go from 2 to 3.
All right, I gotta find this real quick, but I'm gonna pull you up something that I found very interesting.
Christian asked how many companies there are that are worth $1 trillion. I want to say there's like 5 or 6 of them, right?
$1 trillion companies.
Yeah.
Tesla, Microsoft, Apple,
Google,
Amazon.
I think that's it. Here, it's Apple, Microsoft, Google, which is Alphabet, Amazon, Tesla. Yep, just the 5. That's it.
All right, I gotta find this.
Or no, not Tesla at the moment. Tesla was, but it's not now. Anyway, and also Meta was, but it's not now. But it will be again, most likely.
Yeah, and then we also should talk about AMC today, Spencer. AMC not having a great day.
Where's it out? Is it still in the 20s?
AMC?
Yeah.
Let's pull it up.
Yeah, let's pull it up. I have not looked at AMC at all today.
Yeah, it's at
All right.
$23
So
right
it's
now, but down
23?
15%.
Okay.
I don't know if this is a sign of, that the meme, the AMC GameStop trade is officially over, but not a great day for AMC.
So when did the squeeze start? At what price? At what price? You can argue the squeeze started at $13, right? Because that was kind of the first. That was kind of one of the first big days. The high from January, when GameStop was the biggest thing happening, the high in AMC was 20. And we're at 23 now. And then really in June or the end of May, when it started popping off again, it really started running up when it got to 13. So this looks so bad. This looks so bad.
Okay.
I can't speak to a short squeeze, or I know people are like direct registering their stocks so that the brokers can't lend them out, and that'll supposedly expose naked short selling. I can't speak to that. Frankly, I don't know. I can't. What is the short interest here? The short interest on AMC is not even that high. 87 million out of 512 million.
Yeah, I think we've seen a lot of shorts flow out at AMC and GameStop. But real quick, Spencer,
Yeah.
this is what I was looking for. So
can you zoom in? What is that? It's too small. Thank
yeah,
you.
so all right, I'll zoom in and I'll go chart by chart.
Thank you.
So this is Alphabet, of course, Google, Microsoft, Amazon, and Apple. How long it took each of these companies to add $1 trillion of value. So it took Alphabet 500 days from about mid 2020 to current day, 500 days to add $1 trillion of value.
To go from 1 to 2 is what you're saying.
Not necessarily.
Not necessarily.
To go from 1 to 2, just adding $1 trillion of value in a period of time. It took Alphabet 500 days, took Microsoft 473 days, so both about a year and a half. Took Amazon about 2.5 years almost, 829 days. So this is from 2019. Here's the COVID crash right here.
Why didn't they start off? Okay, whatever. I don't care.
I don't know how they selected these time frames. Or if it's
why are these time frames?
Because so here's what I think they did. I think they took the quickest duration that it took to add $1 trillion of value at any time in the past, whatever.
Fine. Okay.
We'll say that. Apple did it in 118 days.
It's ridiculous.
I mean, Apple, I'm going to go ahead and say it right now. Apple is my GOAT stock, greatest stock of all time.
Oh, that's not. I thought you were going to say. I thought you were going to say the exact opposite. I thought you were going to say Apple's my short of the year next year.
No, God, no.
That's where I thought you were going with that.
God, no. I gave Apple out at 160. I said I loved it, and everyone was like, "Oh my god, it's so overvalued. Everything is, a bubble. It's gonna burst. All this stuff, and it's gone up. Let's see from where I gave it at.
I remember while you look that up. I remember texting my friends.
It's gone up 10% in the last month and a half.
I remember texting my friends in January. I think it was January of 2019. Or no, it was no, it wasn't January 2019.
Jonas is asking, what about Tesla? Tesla became a $1 trillion company after the COVID pandemic, so you would have to go from inception to that time. So it'd be 8 or 9 or 10 years or something.
Yeah, I think I texted my friends in January of 19, and I said, "Hey, Apple's at its lowest point in 3 years. If you want to buy it, now is the time."
I think we should do that though, because I think like you said, or like you kind of gave me shit for Apple. It's not really a hot take to say Apple's the best stock of all time, but I think a lot of people would argue, Tesla or Amazon or some of these other stocks. But I think we should do an article series on that, Spencer.
Okay.
Best stocks of all time and why.
Wait, Jay Rice, what was the answer to your question?
What was Jay's question? No, before he tells us the answer, I'm gonna guess it.
Jay Rice asked what 2 stocks had outperformed Apple every year for the last decade. I don't remember the question anymore.
Decade?
I don't remember the question.
Oh, you guessed Domino's Pizza as one.
Yeah.
I'll guess Crocs.
Oh wait. Yeah. Okay. The question, he put the answers in there. So I have the answers now. The question was.
I'll guess Crocs.
I guess Crocs too.
Really? So we're both guessing Crocs and Domino's Pizza.
We were both wrong. No, one of them actually. Now that he said it, I did know that. The only one I didn't know that.
Not every year. What is it? Just over the last 10 years?
I'm trying to find the question. I'm scrolling up here. It was.
If it's over the last 10 years, I think
no,
Tesla.
it wasn't. It was longer than that.
Okay.
It was
Nvidia, maybe.
It was 20 years. 2 stocks in the S&P have outperformed Apple in the last 20 years.
Nvidia might be one of them. I don't even know if Nvidia was trading in 2001, though. Let's see.
Yes, I'm sure it was. And the answers were. One of them was Monster.
Oh,
that's easy once you think about that, because that monster chart is a monster. And the other one was, I had to scroll past it. Tesco? No way. TSCO? Really?
Let's see. Max.
Oh no, that's Tractor Supply. Never mind. I was gonna say Tesco's a different company. Okay.
Going back to 2001 to now.
Tractor Supply. Wow.
Huh.
I definitely would never have guessed that one, Jay. Good trivia. Okay. Thank you, Chris. Okay, let's bring on Chris Capre, shall we?
Let's do it. Yeah.
Okay.
If you guys are new here and you don't know Chris Capre, he's a technical genius. He knows his charts, and he's also got some very interesting option flow data. So if you're interested in options, if you want to check out kind of how many puts are being bought versus how many calls are being bought on a certain stock, just throw it in the chat, and hopefully we'll have time to get to it with Chris. But without further ado, let's go ahead and bring Chris Capre on the show.
Wow, I wasn't ready for that intro.
What's up, man? How we doing?
Very good. And yourselves?
Doing great. We're also we're looking for some feedback. If that intro was too loud, let us know, people, and we can turn it down a little bit. But we have.
Well, do we have a new one? I might have played the old one on accident.
Well, we have mixers up here that make the sounds quieter for us in our ears, but they're louder for everyone else. So if they're too loud, just let us know. Chris,
it
how's
had
your
some
weekend?
verve. It had some punch to it.
All right. We like that. We like that. How was your weekend?
Not bad. Yourself?
Not bad. Not bad. This weekend, I learned that Aaron Bree used to be a lax bro. I didn't know that, but now I do.
I played lacrosse for 3 years. Come on. It's not a big deal.
Okay. Fair enough. Chris, my take on Friday was hands off for me until Wednesday, because who the heck knows what's going to happen until then. And I think I think that probably the market is sort of telling you the same thing today. Is that your assessment of today's action? Is we're just like, shoot, hands off till Wednesday?
Yeah. So we got to look at it is that this week, and I think your assessment is, totally right on, which is that we have I think 5 central bank meetings this week. We have FOMC, which is a very, heavy FOMC for a couple reasons. We've kind of had this little hints and hawkish plays from, Powell saying like, hey, we're going to like quicken, our reduction in the tapering process, that we're going to slow the tapering down even further. And that kind of spooked markets a little bit. And so during such a low liquidity time, it kind of is going to set the tone. Are we going to have a Christmas rally, or are we going to have some pullback into the markets? And so this is, if we look at it, I mean, once we had that VIX rally, and let me open up the 1 hour chart here. So I talked about, if you remember on the 6th, I said, hey, watch out. VIX is getting rich. It needs, because it's more and more expensive, it needs more and more capital to keep these elevated prices. If it fails, VIX will come back and create a tailwind in the markets. And we got that on this day, which is the 7th. So, but since then, gone nowhere. And what that really tells us as traders is that this rally was really more a kind of, it was what we call a Vanna rally, where implied volatility comes down and that changes the dealer hedging requirements on the options side. But once that VIX was unwound, most of the damage was done on the 7th. We've gone nowhere. And so that tells us that the fuel wasn't from traders building up positions, because they're not building up positions before the FOMC. They're reducing their positions right now. They're kind of not really buying into the market because they're waiting to see how the FOMC is going to play. So we combine that with the fact that we actually have a very large December monthly OPEX coming this Friday, and you're going to see, a big change in the structure of the market after Wednesday and certainly after Friday. And so because of that, this kind of low volatility, low build-in positions, not much happening in VIX or anything like that. Like today, we had a little bit of move in VIX, which caused the S&P to sell off. But other than that, we haven't had much. VIX just consolidated. So once that happens, this volatility is going to open up or down. And really, I think traders today's VIX action, in my assessment, is really traders saying, we do have a little short-term front end, worry about the markets, that this could be kind of a very bearish move from Powell. And if it does, they're buying a little bit of protection ahead of time. That's why VIX is up on the day and SPY is down. Some people on Twitter were saying, oh, well, Apple's hitting, 3 trillion market cap, the market will sell off. The market, this S&P 500 is more tenured to the VIX than Apple. So there's much more hedging flows due to the VIX on SPY than there is on Apple alone. So it's really a VIX play today. Like if you look at VIX, and if you compare it with the SPY, it's like near perfect identical. It's a complete inversion. Here's the consolidation. Here's this. VIX starts to VIX starts to top out. That's what we're seeing in the S&P. So really, what we saw in terms of the weakness to start off was probably traders just buying some short-term protection in it, and that's really what I'm reading in the market. So I think your read is right. I think traders are holding off. We've told our traders, careful on adding long exposure until we get FOMC, cut back a little bit. Let's let this play out, and then we can take positions. Because if it isn't too hawkish, if it's not bearish, then we're probably set up for a Christmas rally to the end of the year. And so I think traders are just kind of saying, hey, let's get the all clear before we do that. So I think your read is right on. And so I think that's what's going to happen. With that being said, I think there's a trade opportunity here. Since IV has come down a little bit, last week at the money calls on S&P 500 were 25, 26, 28% implied volatility. Now they're down a little bit. And so with that, there might be, if volatility is going to explode after FOMC and Friday, which I think it is, I think there's an opportunity for a long straddle here. So, S&P 500 has been stuck mostly in a 3-point range, minus this overnight expansion. And so we get towards the middle of that. Tomorrow before FOMC, late in the day, might be a good opportunity for a long straddle, because if that volatility does get released, the straddle will make money up or down. So we don't have to know direction. We just play the long straddle on this one. I think that is the play to take on the S&P 500.
I like it. I mean,
I like it too.
I like the idea. It seems like everyone out there is kind of a little bearish heading into this, into Powell speaking on Wednesday. So I like being on the kind of contrarian side. And I like also, anytime we have history at our backs, right, Chris? Like we've seen what has happened in the past, essentially every single time Powell speaks. So to me, hearing people say like, "Oh my God, I'm going to go short into Wednesday," it's like, why? Why would you ever do that when we have history showing us what the market tends to do whenever Powell is speaking?
Yeah, it seems like I've been in this for 21 years. I was a broker on Wall Street. From my experience of what institutional traders are, most of them are not taking directional bets right now. They're paring back positions as a whole. If they were, we would see more directions in the market. You know, if somebody's getting long underlying, fine, you're not going to have theta decay. But if you're getting long options going into that, then I think you're going to be eating a few days theta, which really is unnecessary. That's why if I'm suggesting a straddle, like I myself am looking at a long straddle, I'm waiting till tomorrow is close to the close as possible, because then I don't have to eat Monday's theta on that and take that depreciation. So I think the volatility is going to unclench. I don't know if it's going to be up or down. I don't know how the speech is going to play out. I just know you combine that FOMC with the big expiration, you know, about 33% of the S&P 500 contracts are going to be unwinding. And we saw what happened last December OPEX. You know, last December OPEX was super clear. You can see it very clearly. Here's the OPEX, and look what happens to all that volatility. Here's positive gamma leading into it. OPEX happens right around here. Boom, big expansion volatility because the options board was reset to a major degree. So I think we're going to see something similar. I'm not saying it's going to be down or up. I'm just saying I think we're going to see an expansion of volatility. And because of that, I want to take advantage of that expansion.
So with that being said, and I saw someone in the chat asking if we will be covering this on Wednesday. Yes, we will be. I don't know, Spencer, we'll have to talk if we want to do just a live restream or maybe we add some commentary, depending on what time of the day it is. But Chris, are there any names out there right now that you're seeing some interesting option order flow in?
Yeah, Amazon. I'm seeing some bearish order flows in Amazon. And Amazon, you know, I look at the structure on the weekly. It's had a couple chances. You know, we had the breakout, but quickly sold. You know, it tried to hold and then aggressively sold. Then it treated 3,500 as resistance. It got above it again for a couple weeks, and we're back down. So I look at that, and I feel like Amazon, I think, is a sell and a pullback. I have seen some large option flows come into the bear side, targeting 3350, and that makes sense to me because if we lose, I think if Amazon loses 3,400, then it can be down to 3,350 in a jiffy. And let me show you
So Chris, just to back up for a second, when you say sell on a pullback, you're not saying on a pullback from the stock. You're saying a pullback from the trend. So if it actually goes back up.
Yeah, I want this to. What I'd like to see is Amazon drift into 3,500 if I can get it. And so, you know, if let's say the FOMC is not that bearish, let's say it's mild, we could see a pop in equities and indices. But the way I'm seeing positioning in Amazon right now is that the dealer hedging requirements are kind of in this position where if we start to lose, you know, today's lows, we could be down at 3,350 in no time because dealers will actually start trading with the market as it sells off. But as it starts to rise, dealers will start shifting. Instead of trading with the market, they'll trade into the market. And it's important to understand that difference. And there's just a lot of positioning around 3,500 that, and even 3,525, like this right here seems like very strong resistance to me. There's a lot of positioning here that if we were to drift into this, I think this is a good location to sell. I think dealers will start to hedge and actually start to sell those rallies as we do that. And then I think you'll start to see also traders, there's a lot of open interest there for traders wanting to sell this lower. And most of the targets are targeting these lows down here between 3340 and 3450. After that, you know, it may struggle a little bit, but there's definitely kind of like a ledge of positioning at 3,400. And then there's a strong amount of positioning between 3,465 and 3,525. And if you see where 3,465 is, you can see it right here where this little gap is. And this is where the pullback is. That's where that positioning is. So between here and here.
outside of the chart, we did have some kind of bearish news on Amazon over the weekend. There is obviously a big tornado that went through the Midwest and kind of around my neck of the woods in St. Louis. There was an Amazon warehouse that got destroyed by the tornado, and apparently there were some employees in there. That there may be some deaths involved. So I think we'll see over the next week. And it's so interesting to me because this is why it's important to have a pulse on the news, even if you're just a technical trader, because in my head, I was like, all right, Amazon's such a big company, such a huge stock that I don't know if this news story is really going to move the stock. But that's what a lot of people are attributing today's down day, and Amazon's actually down more than some of the other big name tech stocks, and down more than the market overall. So even a company like Amazon can be impacted by these headlines, both negative and positive. So again, even if you're just a technical trader, it's important to keep a pulse on the news. We do have the live news feed in Benzinga Pro, so if you haven't checked it out already,
I think it's one of the best news feeds out there because it's all in one cohesive technology. It's all right here. As soon as I click on this, I get a chart going right away, if I want to. So I have my movers on the day. I mean, it's just I have earnings right here. To me, it's the most succinct, easy to use app, and it's in terms of consolidating information. Once I got my hands on it, I haven't gone to anything else since. So I think it's an awesome app.
Yep, well, we appreciate it. All right, so we've got Amazon. What is the next on your list?
I want to take a look at Netflix since you mentioned it. And so, what I'm looking at Netflix right now is I'm seeing a couple things. First off, right now, not including today's option positioning. So we had about 275,000 calls. We have about 381,000 puts. So it's definitely a little bit put heavy right now. And sure, some of that is going to be people selling puts, but there's definitely people buying put protection on it, especially after this big weekly sell-off. There's no way traders that are holding long Netflix positions aren't adding some protection on that. And so when I look at that right now, I see a couple things. First off, I see about 20% of the options in Netflix rolling off this Friday, which kind of adds to that whole theme of, the S&P 500 has a lot of options rolling off this Friday. There's a lot of single name stocks, especially some of these strong ones like Netflix, like AMD, Nvidia, Apple, Tesla. We're seeing a lot of stocks with a lot of options roll off this Friday. And it makes sense. A lot of people don't want to hold positions through the last few weeks of the year. They want to close out their positions, close out their portfolio, lock in their gains, minimize their losses so they end the year strong. There's going to be reasons to sell them for tax purposes. So it's not surprising that this December OPEX is going to be a big one. And so when I look at that, I actually look at the position right now. I think Netflix short term is a sell on rallies. Medium term, I think it's a great stock. Short term, 1 hour charts, what are we seeing? We had a nice bounce around 600. And it was like that same rally that we saw in the markets, but 1 day of selling took out 2.5 to 3 days of buying. So there's still a desire to unwind some of this position. And so we are approaching support here. I feel like rallies up to 620 to 630 are short-term bearish before the FOMC. And the problem with Netflix right now is that once we lose 600 or 595, which is this low right here, the positioning for dealers really puts them in a situation where they're going to start selling as the market goes lower. They're going to trade with the market. And that could exacerbate the selling. And if they're selling with the market as it goes down, that's pulling liquidity out of the market. So it's destabilizing.
That's one of those cases where it's like take the elevator down, right?
Yeah. It stairs up, elevator down, as they say. And I'm really not seeing, in terms of like a medium-term perspective, medium-term, I am bullish. We still have a lot of support below. But I'm not really seeing the hedging impacts from dealers come in until we get to about between 575 and about 545. There's a lot of liquidity inside here. We have a lot of time in history in here. And you also have the breakout and the pullback here. So I think, we get into this range between here and here. And I think medium-term and long-term players will start accumulating longs in Netflix. And so short-term, I don't want to be buying it. I would probably sell on mild to medium pullbacks, maybe hold it for a couple of days or something like that till the FOMC. But then hands off, wait. And if we start to get in this zone, then I would look to build medium and long-term positions in Netflix. There's just so much liquidity in here. There's so much flows in here, so much open interest. At some point, it's going to find support in there, in my opinion. And I think when it does, people are going to start be like, hey, maybe the tide's turning. Maybe this bear trend's over. Let's start accumulating Netflix. It's just such a love stock. As you said, most people that you talk to on the street, almost everybody has a Netflix subscription, but not everybody has a Disney Plus. You know, they're moving into games and streaming. That's another vertical that they have. They already have the client base that they can access to. I also think their move into Asia is also partially correlated with that because Asia has a lot of gamers there. So, you know, I think that's all strategically done. I think short-term bearish, medium-term bullish.
We see these, mobile games that come out, there's always like one a year that becomes like the biggest game. So who's to say that Netflix can't put out, I know they've already talked about a Stranger Things game. If they haven't talked about a Squid game already, then they should. But, if they put out like that type of a phone mobile game or something where everyone's playing the Squid game on their phone, then, that could be huge for Netflix. But I'm glad that I saw kind of bearish in the short term on the chart. It sounds like, you're agreeing at least until we can catch one of those support levels.
Yes.
Yes. I'm just happy that I didn't botch reading that chart.
Yeah, I think your analysis is spot on. Tesla, I want to look at Tesla and Apple real quick. I do want to mention ARK because Spencer gave me a little bit of a hard time for it last week. We are right back where we were.
I don't remember what I said, but all right. If you
that's all Spencer does. He gives our guests hard time, so then my job is having to
cool.
Wait, I don't remember what I said.
I said I don't want to be buying ARK on this rally. I think it's going to fade back down.
And I have to schmooze with the guests after they come on and be like, "Don't worry, Spencer won't. It won't be like that again." That's my job.
Yeah, we're pretty much right back where we started with ARK. So I mean, what did I say? Short term, you can buy the rally, but medium term, I don't like it. And again, it's because ARK is exposed to a lot of names right now that are not profitable right now. They could be great companies in 3 to 5 years from now. They could be holding some of the most amazing patents and technology that in 3 to 5 years, they could be amazing. Like they could be some of the most important stocks, game changers in terms of technology. But short term, what are we seeing? Stocks like Apple are holding their ground or gaining ground. Investors are dumping positions in weak holding stocks that aren't profitable, that were great in 2020 and the first 2 months of 21, but haven't really materialized much since then. And so, I'm still, I'm not going to take my position on ARK yet. But Tesla is an interesting one to me because from an order flow position, Tesla is in a very tricky spot. What are we seeing in the bounces? And this is how you use price action and understand what's going on with the flows. If the bounces keep getting weaker and lower, then that tells you that the bulls are running out of steam. They're just not buying the dips with the same alacrity or verve that they did before. If they were, then the bounces would be just as high or higher. But we're not seeing that. Here's your first bounce. Here's your second bounce, about half as high. And it's shorter in duration too, which means that over time, it's not being bought up as long. If it's bought up consistently over days, that's order flow over time. If it's only bought up a little bit and then it returns back down, that means it was just a short-term flow. It's not a longer immediate-term stabilizing flow. So we have a weaker bounce, and then now it's treating the weekly view up as resistance. So we're seeing lower highs, we're seeing weaker bounces. And Tesla is in this weird position where, don't get me wrong, Tesla has some great products, but because of the speed at which it rose up over that 4-week period, because of this speed, it didn't have time to stabilize at levels and build a lot of open interest there. So it's kind of created a little bit of an air pocket for itself. And my worry is we get a bearish FOMC. I think if Tesla loses this 943, we're back at 900 fast because there just wasn't a whole lot of time there. That means there's not a lot of flows there. It means there's not a lot of support there. So, that's my one concern with Tesla right now. Tesla's kind of in a Netflix situation. Short-term bearish, medium-term bullish. So, but it does have a little bit of an air pocket below it. And that's what I'm seeing in the positioning. Like once it loses 950, 945, dealers are going to start selling that to hedge their positions. They're going to start trading with that downtrend that will pull away liquidity from the market. It will destabilize it, and that will just exacerbate the downside. So that's what I'm seeing on Tesla. And then Apple, I think right now, how Apple, even though the market's down, it's still holding. Like the losses are not that bad. That tells you there's still interest in it. I do want to say on this rally that we saw, what we have seen over the last 6 sessions is a huge jump in short-term options on Apple. And so maybe a lot of those people who were buying Tesla calls have now shifted their attention to Apple, because Apple short duration options have exploded, just exploded over the last few sessions. And so I feel like
I wonder why. That's sarcasm.
Yeah, I know. It's such a good stock. It's got so many things going for it. I think Apple is going to be in a really good position over the next several years. And so when I look at Apple positioning right now, what do I see? Before today's options, 4.8 million calls, 3.8 million puts. That's a very strong bias for a stock that's in every hedge fund, every mutual fund's portfolio. It's like probably one of the most owned stocks on the planet, and it has some of the highest overall options in it. But it's not like Tesla where it's a lot of short dated coming in and out. There's a lot more longer term flows as a whole in Apple. So we have a skew to the upside on the calls. And, I think that right now we've probably hit the high of the week. I don't think we're going to, at least before FOMC, I don't think we're getting above 182 or having a daily close above that. And so I think right now we got 20% of the options are rolling off in the January monthly OPEX. We don't have too many this week that are expiring. But I look at this overall and I feel like short-term resistance around 180, and I think 160. If we lose 170, then it'll get to 160 in a heartbeat. 170 is a really interesting level because it was resistance, now support here for this launch up. If it loses this, then I think it makes it into the low 160s, and I think it becomes an excellent buy. I'll be long calls on that, probably 1 month out, January OPEX, and maybe even do some leaps on that as well for the following January 2023. I think this will be a great stock to own for 2023, assuming we don't get a major market correction.
Leap's got to get expensive for Apple.
Yeah, they're expensive. They're not cheap by any means, but they will be a little bit cheaper if we get this nice sell-off into it. And you're not buying it for the price. You're buying it for the potential appreciation that Apple really has in store for it over the next year. I think if somebody wants to do leaps on Apple, leaps on a particular stock, if they could choose only 5 stocks, I think Apple has to be one of them. They got so many things in the pipeline. They're working on solving the supply chain issues. They got the Apple Car technology, which has pretty much been fully announced, but not fully announced at the same time. Like now we know that it's in play, but we haven't seen the announcement about it yet. And when that comes out, you got to remember Apple has this nice ecosystem. If you got the watch, you got the phone, you got the Apple TV, it's all inside of an ecosystem. And then they can just integrate that directly into their car. Apple knows products. They know how to manufacture. They got that down. They know supply chains. They got that down. And they know how to make really good products. And so if they make a car, it's going to look really sleek.
All right. Chris Capre joins us every single Monday at 1:30 to give us some stocks and charts on his mind. Chris, always a pleasure. Thanks for coming on. And as always, we'll talk to you again next week.
Sounds good. Be well, Zinger Nation.
All right. Hey, before we wrap it up, AB, I do have to remind the people about today's sponsor, because we are moving up in the world and we do have a sponsor. So let's bring them up on the screen right now. I want to tell you about Nightscope. If you missed them on the small cap conference last week, you missed a good one. Nightscope's fully autonomous security robots have generated over $13 million in lifetime sales and over 1 million hours of field operation. Nightscope recently announced the commencement of its Reg A Plus offering. What does that mean? I'm about to tell you. With over 28,000 investors and $100 million already raised, Nightscope is reimagining public safety. To learn more about Nightscope's offering, go to the link that's on the screen now. It's startengine.com/Nightscope. I'll put the link in the on the screen right now. Startengine.com/Nightscope. If I could spell. There it is. Check out the link there. More information is in the chat and description. Check it out. Robots. They're the future. They're happening. All right. That's a wrap for our show today. We got Moon or Bust going live right now, talking crypto, talking Mongoose coin, all that good stuff. Hey, we're not doing too hot today on the likes front. Can we get to 100 likes? That seems like not a tough goal. We should be able to get to 100 likes, no problem.
Yep. And this
aren't we
stream
there?
will automatically redirect you to Moon or Bust. They are talking about metaverse real estate today.
Metaverse real estate? Bullish.
Yeah, so
Bullish.
I don't know if you've seen the headlines out there, but there were people that paid like $1 million to be Snoop Dogg's virtual neighbor.
I saw it.
We're going to learn more about the metaverse real estate on Moon or Bust. Stick around. We're going to go ahead and get over to Moon or Bust right now. Peace and love, Zinger Nation. We'll be back tomorrow at 11:30 a.m. Eastern Time. With that, have a great rest of your Monday.
Who's ending this thing?
I can.
Am I in charge?